Good morning, friends. Good morning, friends. Okay, so today we are starting with your AFM classes. Initial 15-20 minutes, I'll just talk a little bit in general about the subject and then we'll get into specifics. So, as such, this is part of your group one. In group one, as such, you have three subjects. In that, the most scoring subject is what you are learning today. When we start with the subject, we'll go with the one mindset that we are securing 80 plus, 70 plus, minimum 60 is to guaranteed. 60 is like 40 of other subjects. So here minimum 60 is guaranteed. If a student comes with the mindset that I need to score only 40, then you don't need me. You don't need even your ICA study material. Even without studying also, you will score 40 plus in this subject. So this subject, the mindset should be that we are scoring exemption. Few ground rules for my classes. First class itself, I'll set it. I'll be very happy that if you are in class by 6. So today we are starting by 6:10 because I had to give you the books and other things. But we'll start sharp at 6. Be in class by 6. Live online guys as well as face-to-face class students. Be on time. In the class, I would want your participation. We are going to discuss a lot of things. Lot of concepts will be discussed. Lot of questions will come to your mind. Whatever doubts, clarifications you have, get it clarified in the class itself. Keeping it in your mind will not serve any purpose. So clarify your doubts, learn everything, learn the subject. It could be a journey for next 3.5 months. We are going to have daily classes. So I need approximately 80 classes. In a week, one day off will be there. That is just to recapture whatever we are doing it in the first 6 days. So you recapture everything, learn from it, and then proceed. I think most of you could be in your articleship. So you need to balance your articles as well as your classes, which is where we give you some backup classes in case you end up missing out on that. So those backup classes will come handy in case you miss out. Again, I'm saying in case you miss out a class, it becomes handy. Otherwise, the purpose of backup is not to miss out on classes. So come to class. I also get a lot of energy when I see you guys, and it is easy for me to teach also. Otherwise, just talking to a screen will not serve any purpose. So be on time, attend every class, ask your doubts, get your doubts clarified, whatever confusion you have, whatever guidance you need, either ask it in front of all. You can't do that, any will be coming for rounds, so that time you ask it. I'll go to the subject in some 2-3 minutes. So first, some general rules I'm saying. So this subject, as I said, the mindset will be 60 plus. We will learn everything in the class. We will have some tests during the process. So try to attend those tests so that you learn in the class itself. Once my classes get over, you spend maybe another 10-15 days and you keep the subject aside saying that, okay, I'm done with this subject. I'm not going to look at this subject anymore till you write your exams, because depends, some of you could be writing May, some of you could be writing September, some of you could be writing later years, you could be in 27, 28. I know students who have registered, even 27 students have registered, so you could be writing at any point of time. Does not really matter. One subject which does not undergo any changes. So first class itself, be very very clear, a subject which does not undergo any changes at all. Standard subject, a subject where students invariably score exemption. Latest set of results when came, many students message was, I cleared with an exemption, I cleared with an exemption, I cleared with an exemption. Only the word exemption kept on getting repeated from the students. So this is one paper where scoring 60 plus is going to be extremely easy. And if you're writing your both the groups or be it single group, whenever you write your exam, that time this will take care of your aggregate score, because there are other subjects where students struggle little bit. Theory oriented papers, despite putting in efforts, sometimes marks you don't get it. So which is where this, as well as you have another paper which is FR, but the problem with FR is it is huge. This paper is not that huge, so it becomes more scoring for students. Clear? So mindset is we are scoring 60 plus in this paper, which is what is guaranteed. So I in fact start my class with this only one word: exemption in AFM is guaranteed. So you are 100% scoring exemption. Anything less than an exemption is little bit unhappiness for me. So exemption is 100% happening. But okay, that's not the only mindset. It's not that we are learning only with the mindset of scoring an exemption, because post clearing your chartered accountancy, most of the CAs would want to get into a profile which is related to this subject. This is what I keep hearing from many students. You may ultimately get into it, you may not get into it, that's okay, that's your destiny. But most of the people will say, I want to do something on investment banking, I want to do something on credit research, I want to do something on equity research, rather than people saying I want to do something on stat audit or internal audit. That could also be interest of few people, but most of the CA, when they clear, obviously if everyone is going to that path, obviously only a handful of them will get into that path, others may have to do other path. But many CA, the initial mindset will be that I want to get into a role which is related to financial management, which is what mindset of many people is there. Also, as you learn the subject, you will know that practical application is there. Unfortunately, in your articleship, you may not get exposure to this subject, which is where a lot of curiosity will come. As you learn the subject, you will feel that I can try to apply some of the learnings in the practical world immediately. Some of the learnings will be applied later as part of your job. Some of the learnings could be applied at your personal end also, at your personal end, because there is something called as personal wealth management. As such, the subject is related to finance is wealth, and ultimately, which is what is the for every organization, unless this is intact, they cannot handle other things. So you be good in tax, you be good in indirect tax from a corporate point of view, but ultimately they'll have to manage their finances well. Like a corporate has to manage their finances well, at a personal end, you also need to manage your finances well. So which is why it will become extremely critical that learn the subject with a lot of interest. Some areas you'll not be able to link with what you are learning, because unfortunately most of our articleship exposure, including me, when I did my articleship, I did not have an exposure related to financial management. But when I started working, I worked in a rating agency. It is technically related to credit research, which is what the subject is all about. The subject covers that credit research angle. I worked for around 12 years there, and then I've been teaching now continuously. Only I've started teaching moment I cleared my chartered accountancy. I used to do both, but now only teaching is what I do. But again, I say the point is very clear that this is a subject which has lot of application from your exam point of view, lot of application post qualification point of view, and lot of application at your personal end as well. It's not like your DT or an IDT where you go to a function, a relative may come, ask you a doubt on direct tax, ask you a doubt on indirect tax. People still ask me, I have zero clarity on all those. So people may ask you doubts on direct tax, indirect tax. They may not ask you doubt on financial management, but still a subject which will give you a great value post qualification. Again, I'm saying post qualification, most of the sought after profiles are from this subject only, be it equity research, be it credit research, be it investment banking. Does it mean I will directly get into it? No, you may not get directly into those profile immediately, but having a base in this is very critical. Having a good base in this subject is going to be very critical. As far as my classes are concerned, we're going to learn everything in a logical manner. Some of you may have seen me in CA Inter, some of you may have seen me in YouTube classes or wherever you have seen. Our classes are going to go through fully logical route. We are just going to work with logic. We'll learn logic about everything. I will rarely tell you to remember a formula, because the subject revolves maybe around 100 to 200 formula could be there in the subject, but I hardly tell a student to remember even maybe max 5 formula or 10 formula I'll tell you to remember. But otherwise, the entire subject, everything of the subject will go through only logic. We are not going to by heart anything. We will, again, our objective is to learn logic, apply logic. Sometimes when you try to learn logic, you try to overthink, which we will tell you to avoid, because overthinking will, because unless you see the practical application of it, some areas you may not be able to relate well. Otherwise, if you see the practical application, you will find it easier to relate. Some areas, as we proceed, you will understand all that. So this is basic start. Just be disciplined over the next 3.5 months. People who are in live online, there are a set of students who are going to see me in the recorded mode, be it in the recorded mode, be it in the live online mode, be it in the face-to-face mode. Discipline is the most important part. Unless you are disciplined, you will not be able to complete the subject on time. On time is 3.5 months for us. People who may see it in recorded mode later, some of you may miss out some session. When you miss out, because see, I'll tell you what would have happened. Today morning, if there was no class at 6, what will you do? What would have done by now? Everyone, including me, I can afford to do it. You may afford to do it now it is okay, now you can still afford to do, but some of you could be coming closer to your exams. You could be writing in May, you could be writing in September, you could be writing later. You can afford, you can 100% afford to sleep at this point of time, but that's not needed. Like, if there is a class or no class, the class which you are doing now, it will put you into some kind of a format saying that okay, I'll wake up at 5 o'clock, I'll come to the class here, I will learn for 3 hours. Like you do it for continuously for 3 months, ideally it should become a habit for you. It should become a habit for you. Again, I'm repeating, I can still afford. If class is not there, I'll sleep. 100% I can afford to do that. You cannot afford to do it at this point of time. Clear your chartered accountancy, do whatever you want to do. Obviously, there is a corporate which is sitting, which will tell you how to work and all. That is different story. But again, as of now, let's be consistent in your preparation. Just to give you, some of you could be doing your articleship which involves travel. If there was an office travel needed at 6 a.m., 100% you would go to that place. If there is a train to be taken, or if there's a flight to be taken, you would not miss out on that train or flight, because there is a senior sitting on top of you. That you are doing for others. When I say you're doing for, you learn, but you do it for others. People are so disciplined in their articleship. They ensure that they go to office on time, complete work, everything you in a disciplined manner. I am nowhere saying you need to compromise all of that. The discipline which you show there somewhere has to be shown in your personal preparation also. Same senior will look at you differently moment you say you are a chartered accountant and moment you say you are an article assistant. The same client will see you differently moment you are a chartered accountant, moment you are a article assistant. You are the same person. You have written your exams. Moment you have written your exams, if you are clearing in that exam, means you are a chartered accountant. But till the result comes, the person sees you differently. The person starts to see you differently moment after that qualification is done. So, like we do so many things for others, because in articleship, people become so much serious that they end up missing out on classes also. They say articleship is what is very, very critical. Same senior, after 2 years, your articleship is over, will be least bothered what you are doing. So that's a practical world. You can't do anything about it. I'm not saying your firms are bad or your firms are good. Like you do so many things for others, please do it for yourself also. Yourself, spend 3 hours you're going to spend in the class, which is by force. This is by force, because I have come here, you will also come here. So that is technically by force you are coming here. But after the class, when I say you do something, that is voluntary choice of yours. That is 100% voluntary. In a set of so many students, some will do it, some will not do it. We'll obviously want everyone to follow whatever I'm saying. Just follow my guidance over the next 3.5 months, 4 months, whatever. Our classes will get over by the time which I've told you. But even some of the students later, when they watch in the recorded mode or anything, just follow whatever I say. You will 100% get what is there in the screen. Exemption in AFM is guaranteed. More than the exemption, you will be a better financial analyst when you talk to others. When you talk to others post qualification, you will be a better person to do financial research, equity research, credit research. Objective is to make sure that your logical thinking improves, so that you are in a position to handle all your post qualification work related to this subject. So this is the mindset. I want you to be in the class on time. I'll tell you a lot of things initially itself. When people start joining our batches, they ask us saying that will you conduct test. We'll say yes, they like it. We say no, they don't like it. But when we keep test, they don't write it. So when we are keeping test, they are not ready to write it. But the question 100% comes, will you keep test? I have done this not on this batch, I've been doing this over the last few batches. First test, half students write. Second test, 1 by 4 writes. Third test, 1 by 10 writes. Fourth test, the 2-3 students who are very serious, they'll write. The same set of students 5 years back, 4 years back, when we are in a school, you were following whatever your teacher was saying. You were 100% writing your midterm test, quarterly test, half yearly test, pre-annual test, and then only you'll write your annual test. And chartered accountancy means you feel okay, I have become a great person now. Now I know everything. I'll go directly to the final exam, sit there and write the exam. Like in your 10th, 12th, you feel no, you are not confident. You want to write a midterm, you want to write a quarterly, you want to write a half yearly, you want to write a pre-annual, then only you want to write an annual exam. And there are schools which conduct more tests also. And I am 100% sure most of us would have written all those tests, including me. When I got into chartered accountancy, I'm being honest, I have also skipped mock test of chartered accountancy, but that doesn't serve purpose. In the end, you will end up struggling later on. It is okay to struggle before that period, because when you get to last, when you get very closer to your exam, that time many students write mock exam. Good to do that, but time availability becomes a constraint there. When time availability becomes a constraint, obviously that takes a backseat, saying that okay, now let me concentrate on preparing. Mock test and all we'll see later. Let's not worry about mock test and other things, because that takes a backseat at some point of time. Now when you have time, at least please make good utilization of that. If you're writing the coming attempt, don't worry about it. Class, follow whatever I say. Post class, maximum I'll need is 1 hour from your side. That's the maximum I'm saying. Maximum 1 hour I need. Somehow you will have to find that time. You are not finding time, no problem. I really don't have a problem. Again, the people who have followed my teaching will know I'll not force you to do anything. It is a voluntary decision of yours to come to the class. To register for the class is first decision. Second, waking up early and coming for the class is the next decision, which you have taken with a lot of difficulty, because this climate, people would want to. I also wanted to do it, but we have decided to come here. After you have decided to come here, there are a set of students who are joining from live online. All you have taken effort. You have taken 100% those extra effort. After taking those extra effort, if you have come for the class, learn. After learning here, spend that extra maximum, again I'm repeating, maximum 1 hour. Okay, it's not that you just need to secure exemption in AFM. So that does not mean just because we are learning this, we end up compromising all other subjects. No, you need to focus on your other subjects also. How you balance it out, it's up to you. First class, I'll tell you one thing which you should 100% try to do it now itself. Look at when you're writing your exam, decide your plan. When are you completing your SPOM if you have not completed? When are you completing your AFM classes? If some may do self-study, some may do whatever you are doing. Please prepare a plan. Why I say this? We started this batch. First thing student asks me, when are you starting the batch? Second thing they ask, when are you ending the batch? Third thing, what days are you having class? Fourth thing, what is the timing of the class? If I announce a batch that AFM class will happen whenever I get moved, people will not register for the class. If I say that I will do the class whenever I find convenient, I'll send a message in WhatsApp, all you have to come to the class. Nobody will register for the class. You want everything perfect from the other side. But internally, we don't want to do that perfection. Internally, you don't want to prepare a timetable, but you want a timetable from our side. If I don't give a timetable, you will not come for the class. If I say I don't conduct test, you will not come for the class. If I say I'll complete only 60% syllabus, you say you will not come for the class. But in your preparation, at some stage, sir, what is important, sir? Should I skip this chapter? Can I skip this question? And if I say I'm skipping the question, then you will say, oh, this guy is not taking these areas in the class. Let's not attend his class. You will talk to your friends also, say that he is not completing everything. Don't attend his classes. And you'll buy the class. You will come for the class. You will miss out on chapters. Your wish is to miss out on chapters. But everything perfect from the other side. Other side, guy has to be perfect. You yourself will not be perfect. Why is that? Why is that needed? Because I'm telling you everything. It is, if I say I'm not teaching 2 chapters, you will say, no, he's not teaching 2 chapters. Those are very, very important. He's not teaching. And when I say you have to read everything, you're not ready to do that. So this is first thing. If I don't give a timetable, you're not ready to come for the classes. If I suddenly say that I want to take a class, again you're not interested. So when you expect certain discipline from others, I just want you to follow those principles in your personal end also. Because if you prepare in a disciplined manner, consistent, systematic manner, it will become very easy. You will clear it in the first attempt. Obviously, clearing it in the first attempt, when I cleared my charter accountancy, the first thing I felt is I need not see those bulkier books. So that is the biggest relief a student will have, that they need not see books. Today also, if somebody tells I'll have to write chartered accountancy exam again, I'll get real fear. My subject I can handle, but other subjects and all, I can't really handle it. It is impossible for me to handle other subjects. So it is, if somebody tells me that you'll have to again write it, 100% I'm not writing it. 100% I'm not writing it. So there will be a big relief. But if you don't clear it in the first attempt, you have to keep seeing those books again and again, seeing those pages again and again, and it is going to be extremely painful. Some of you may have gone through that at inter level. Let's not go through that at final level is our objective, because ultimately ICI wants a student to spend 500 hours, let's assume, for a group. Either you spend it in one attempt or you spend it in three attempts. That's your wish, because some students don't prepare in the first attempt properly. You spend 200 hours in the first attempt, spend again 200 hours in the second attempt, spend again 200 hours in the third attempt, and then clear it in the third attempt. So otherwise, if you are giving that required time, to the subject, you will 100% clear. Give the required time to the subject. It deserves some attention from you. People may say that they cleared it by preparing in the last 15 days, last 1 month, last 2 months. Exceptions can be there. We are not always going to be exceptions. There are set of people who may clear it in just 2 months preparation, 1 month preparation. When time is available, let's make optimum use of time. So we are anyway 100%. The only thing I want is, I used to give 100% backup of classes in the past. I voluntarily made it 50%. Reason is very simple. Moment I give backup to student, you think backup is there and you don't come for the class. So which is why we cut down the backup. Otherwise, we were always giving 100% backup to student. What we thought was an advantage started becoming like a disadvantage for students, because you don't attend the session, you don't look at the backup video also, and then you come closer to your exam. Reasons could be multiple. See, I can give any number of reasons for anything, and you can also give any number of reasons. Reasons are going to be multiple. Reasons, beyond reasons, we'll have to find out one thing: why did you take up this? And let's clear it in the first attempt, because it's going to be a huge relief moment you clear. And obviously there's a pride, there is, whatever said and done in the market, people can keep saying that so many chartered accountants are coming, all that. The course still has good amount of value. The value is there. You will be valued in the market. You can look at the way your clients will look at you. Moment you say your senior is given a little bit of a different attention, you are given a different attention, because somewhere the degree does play a part. Post qualification, after you clear and you start your first job, second job onwards, least bothered. Okay, again, the qualification has value, but second job onwards, it all depends on what is your practical exposure, what did you do in your first job, all that matters. But to get to that initial start, this is the push. We are at here, the degree will push you to here, and after that you can keep growing. That's up to you. Today if somebody says I don't have that qualification, it may not matter for me at present. Okay, but when I started my journey, this qualification mattered a lot. It has completely changed my life. My entire life has changed because of this single qualification. Be it socially, be it financially, be it everywhere, there's a huge impact of this qualification. Whatever said and done, I value this qualification a lot. Today I may not get any big benefit out of it. That's a different story, because today if I come and take class, I say I'm a chartered accountant, not a chartered accountant, may not really matter to students, as long as I'm able to deliver my classes properly. If I'm trying to get into any work today, I'll say I worked in India's largest credit rating agency for 12 years. That is what is going to matter. The qualification has value, but the initial start, for the initial start it is going to be extremely critical. So why I'm talking about all of this is because at CA final, somewhere because of your articleship, students pay too much attention to that, and your firms also put you under a lot of stress, lot of pressure is there. Some firms make you work 10 hours, 12 hours, sometimes it goes 14 hours. Occasional pressure is okay, continuous pressure is there, you don't have a choice, you'll have to manage it. Occasional pressure, it's acceptable. I had, when I did my articleship, I used to have 3.5 years of articleship. So when I did my articleship, occasionally, because I used to work in a mid-sized firm, occasionally during maybe the tax audit season, during the tax filing season, I used to have pressure. Otherwise, it was manageable. I did 1 year industrial training in ENY. There also, I could manage it. It all depends on how you set your expectation clearly. My seniors knew that this guy will not compromise on his preparation, so they tried to balance things. I did my articleship there, in the industrial training there, managed it well. I did never face pressure to skipping classes or anything. So, be it Big Four or be it a mid-sized firm, you set your expectation clearly, manage your expectation well, so that you give the attention which it deserves. Same 2 years of the time you spend on your articleship, if the same 2 years you spend with your subject properly, not that much amount of time, even half of that time, 100% you are clearing it in the first attempt. 100% you are clearing it in the first attempt, because every student gives 8 hours minimum. This is minimum to your articleship. It can go even to 10 hours, it can go even to 12 hours. So when you give so much attention to it, you have to give it. There's no compromise on that, zero compromise on that. After that, give some time to this. Weekends, when it comes, if you don't have office, just give me a minute. If weekends you don't have office, then again, some weekends you can relax. I'm nowhere saying you cannot relax. Relaxation is 100% needed. Balance things, you need to balance things. Yesterday I watched India match fully. In fact, I watched the entire match. I can do it again and again. I keep repeating the same thing to students. I can do it. You should not do it. You can also do it, but you should not do it at this point of time. Balance things. Occasionally you want to do, please do it, no problem. But yes, this does need your attention. And I'll now get into the subject. My general gyan is over. I may not talk about this again later. I really don't want to talk about this again, but maybe after 15 days, 20 days, suddenly if I get that interest, I'll again talk. You may get bored about it, but that's okay. I may talk about it. You will get totally motivated that time, because people say that you don't motivate us. I say this, you're motivated. Motivation for how many days? 2 days. After that, you go back to your normalcy. After that, it is entire normalcy. Self motivation, what is ultimately needed is self motivation. I cannot come and motivate you saying that no, this has to be done, this has to be done, this has to be done. You keep saying that, your total energy is there saying that okay, he has told, I am 100% attending all the classes regularly, I'll do everything. How many days? Happens for 5 days. And then suddenly you feel, no, the senior is killing us now, I need to do this work. I'm totally tired now, I need to take full rest. So you suddenly get into that mindset. Again, after 10-15 days, I say something, again you get fully charged up. Again 2-3 days that is there, again you lose it. Doesn't help, because this is outside motivation. Outside motivation doesn't really help unless there is a fire inside you. Unless you are self motivated, it is not going to work. I can motivate you, I can tell you that all this is needed. After some time you will have to pick on your own. Clear? I'll now get to the subject. Okay, so this is your paper. I'll first initially maybe talk about the paper pattern little bit, and then I get into various areas which are there. A broad overview we will give, and then we start doing it. I have given you two books. There'll be a concept book and there'll be a question bank which is given to you. I'll talk about the books as we proceed. You need not open the books as of now. So there'll be two books given to you, concept book and question bank. Our books are going to cover almost everything which is there. Your entire ICI study material is covered. Latest MTPs are covered. Latest RTPs are covered. Latest previous year papers are covered. It is going to be a one-stop solution. I normally tell students not to see anything beyond this, anything beyond my book. So I give you again that assurance. Still, if you want to open your ICI study material, don't try to do any private author. It will not serve any purpose. My books are going to be exhaustive. It is going to be exhaustive. I never had this confidence maybe 10 years back because I was just improving my books. But last 7, 8, maybe last 5 years, when I started, I published my first book in 2020. After that, I never felt a student. I never felt a student should do anything beyond my books. Beyond my books is not even needed. Everything is covered in our books, be it theory, be it practical question, be it concepts, be it questions, everything would be covered, and this will also serve your IBS paper. So IBS paper, when you write, it will also serve. As of now, only thing which will matter is the book today, as on date, covers something like this. It covers mock test paper till September 2025. This is what is covered as of now in this book. It covers RTP till September 2025 and suggested answers till May 2025. After I published the book, ICI obviously released one more RTP. They're releasing few MTPs. All that will also come to you. It will come to you in some form. What form and all you'll understand later. I really don't want you to do anything on your own. Just follow what I say. You'll get everything. So people could be writing after 2 years, after 3 years, everything will still come to you. Whatever extra ICI releases will come to you in some form. What form and all you will understand later. It could be in form of videos if I feel videos are needed. It could be in form of a PDF if I feel PDF is sufficient. All that will come to you later. So anytime you just see whichever books of later, some students buy my later edition also. You will see initially what is covered. After this, whatever RTP ICI releases, whatever MTP they release, and whatever exam paper comes in, those are the additional things which a student needs to do. Otherwise, nothing else to be touched upon. ICI study material, all questions I have added. I have ended up adding all questions. MTP, RTP, I've done something called as important question. If I feel something is just not adding value, I would have removed them. But still, as you go forward, you'll understand I give certain PDF which will try to cover everything if you want, if at all you want to practice something else. Now, on the paper pattern, it's a 30 marks, which is your MCQ, which is going to come fully practical most of the time. Till now in exam, it has been fully practical. They have not ended up asking theory component in the MCQ section. So 30 marks is going to be your MCQ. Not only my subject, every subject is same only, fully MCQ. Descriptive will have 70 marks. Question 1 is going to be mandatory, and then balance 5 out of 6 questions. Sorry, 5 out of 6 totally you'll have to answer. 1 is mandatory and 4 out of balance 5. 4 out of balance 5. The 14 marks which comes in paper can be a 6 plus 8, can be a 4 plus 4 plus 6, can be a 6 plus 6 plus 2, can be a 10 plus 4, can be any combination. It can be 2 sub questions or 3 sub question, but out of these 2-3 sub question, ICI will add a theory question most of the time. Will add a theory question most of the question, not every question. Okay, out of the 6 questions which are there, mandatory one will have theory. Second, third may have theory, fourth may not have, fifth may have theory, sixth may not have. So they will add theory component in every question. When I used to be a student, ICI used to ask same thing, but theory was a separate question. Full theory was a separate question, so we used to leave it in choice. We used to leave it in choice, thinking that okay, I'll answer the practical component and I'll not answer the theory part. But in your case, you don't have that flexibility. Theory, 100% you will be answering in exam. Whether you answer for 8 marks, 10 marks, 12 marks, 16 marks, it depends. What happens to theory and all, I'll touch upon as we proceed. But this is just a basic background. Basic background is paper is predominantly practical. Practical means problem solving, but there is going to be theory component. There is going to be theory component. When I used to be a student, it was 100% practical, 0% theory for me, because I had made my mind that I leave theory in choice. That was the mindset with which I was preparing. When you prepare, that mindset is not going to work. That mindset is not going to work, that you're going to leave theory in choice. That mindset is not going to work for you. Reason is, every question will have a sub component of theory. Why I'm talking about this? Because many students, when they get into their preparation, at some stage feel theory can be ignored. I would have advised this at some stage to my students, but not now. because when I was teaching initial maybe 7 8 years, still that was working. But in the new syllabus, ICI has made this, so theory becomes, when I say new, not even your the earlier one which came in I think in 2021 or something. After that, ICI has made sure that you will have to answer theory in exam. So theory can't be left in choice from an exam point of view. So this is basic broad background of the paper pattern. Now, as far as your subject is concerned, we totally have 15 chapters. In that, chapter 1, 7 and 15 are fully theory chapters. 1, 7, 15 fully theory chapters. So you may not find that in the question bank. There's a theory section which is there later, which is in the end part of it, where you will find all chapters, including 1, 7, and 15. So chapter 1, chapter 7, chapter 15 theory. 2 and 4 is also predominantly theory. Chapter 2 and 4 is also predominantly theory. There is small practical portion. So technically we have 10 chapters. Technically we have 10 chapters in AFM, which also I club it as two chapters as one. For example, when I was a student, 13 and 14 was a single chapter. This was clubbed together as a single chapter by ICI. So this is one chapter. 10 and 11 is again clubbed by ICI. When I was a student, there will be only 7 8 chapters. Only 7 8 chapters. Now also only 7 8 chapters. It is just that they have made it as different chapter. So business valuation, mergers and acquisition should be a single chapter. Forex and IFM should be a single chapter. Don't worry about the chapter names and all. Don't worry about it. For you, none of them will matter at this point of time, because you don't even know what is there in those chapters. But to put it very simple, you do not have 15 chapters in AFM. You have 10 practical chapters, which also, if I start clubbing it together, it may become 7 or 8 main chapters. That's all. It's only 7 or 8 chapters, very limited portion. We will be able to spend good amount of time on every chapter, learn it extensively. Very limited time, very limited portion is there. Good part, because making it extremely huge doesn't serve any purpose. Also, most of the times, as far as this paper is concerned, ICI doesn't expect you to do this by hearting and other things. They expect you to apply a lot of your concepts, lot of your understanding. So most of the exam application will be very logical. Some gaps here and there will be there, that's okay, but most of it is going to be logical. So here in the entire chapter, most important part is going to be one, being little bit aware of practical areas. That is, if at all you can read a newspaper, it will be good. Any business newspaper, if at all you can read. You cannot read, that's and all, I don't force it. Okay, that's just for your improvement post qualification, what and all people will expect from you. So if you can spend some time, like you spend time on your Insta or on your WhatsApp, maybe spend some 10 15 minutes with a business newspaper. You can't do that, see it in TV also, that's okay. 10 15 minutes if you can spend, great. You cannot spend, really not much required as far as my subject is concerned. Classes, I don't need it, but it will at least improve your personality. You will know about little bit new things, and that will enhance, because suddenly people post qualification think that okay, now I will read papers and get knowledge. It can't come on a single day. Just because you are doing it just 2 months after qualification for your interview purpose, it may not help alone that time. You can spend 10 15 minutes every day. All your newspapers are coming in digital form. Everything is available in digital form. You need not even have a physical paper. Digital form, spend 10 15 minutes if feasible. Not feasible, not needed. Okay, another thing, I suggest this to many students. In our classes, when I explain, I'll explain all concepts. Don't become overexcited and apply it in by buying a share, by buying a bond, by buying a debenture, by doing futures, by buying option. Don't do any of that. I tell very clearly to the students, we are learning concepts. Earning will happen later, so don't get into earning mode now. Many students at this age itself want to do stock buying, selling. Don't do any of that. Please don't do any of that at this point of time. If at all you need to do something, I'll explain that in the first chapter itself, something called as mutual funds. But otherwise, don't get into buying shares, selling shares, buying futures, buying option. Some of you may have done it. Please stop it. You may not like me saying this, because one student in the past batch told me after the class, we don't like telling you all this, that you're telling us to stop doing this shares, buying futures, buying option. Why are you stopping at doing this? You will learn this at some point of time. I Post qualification only. I bought one time. Got into some FNO buying selling. I just started for my office. Reached office, in the gap I lost 2 lakh rupees. In the gap I lost 2 lakh rupees. That entire day total upset, because 2 lakh was a huge money at that point of time for me. Now also it is a huge money only, but that time and all it was a huge money. Lost 2 lakh rupees happened with me. Okay, a person who's little bit aware of the company which I bought, some extremely bad news came, and because of which I lost futures. Okay, 2 lakh rupees lost, and that day no interest in work. Senior is asking me something, I'm not able to do that. And even when I started doing that futures and option, he is asking me to work. My interest is in my mobile only, checking what is happening to the price, checking what is happening to the price. Your interest unnecessarily goes on to that part rather than your focus being on your work which you are doing or you're studying. Because otherwise 9:15 till 3:30 your mind will be, today I do check. Okay, I in a day check maybe 4 5 times also, because I am an investor. Today I can do it, because again, when you are in the learning phase, learn, don't get over excited. There are few faculties who will tell, we will teach you how to do stock buying selling. No, I don't teach it. Again I'm saying, I don't teach you. In fact, my personal shares is managed by my partner. I work in a wealth management firm also. He manages my investments. I don't get into it, because one, I don't have time to do a lot of research. There's a lot of research to be done. I don't find time to do it. So I work in that wealth management firm. He takes care of that part of it. So I just spend some time over there. But point is very clear, we are learning, but I don't want you to do any practical application immediately. No practical application immediately. You got overexcited, he taught me this, got overexcited, and next day you go and buy something, and the entire day you are only seeing that. Because that happens, it does happen. Because when you have bought something, and if it's for a long term, at least okay. If it's a short term, you want to achieve a price and you want to buy sell, people may do this. Unnecessarily your focus will get diverted. So we don't want that diversion of focus. Be totally with the subject, be totally with the subject. Clear? So this is basic background. In the subject we are going to learn most of the areas which are critical post qualification. Like you will learn about something called as capital budgeting, we'll learn something called as your derivatives, we'll learn something called as forex, we'll learn mutual funds, portfolio management. Everything will be learned. I at least don't want anything from your CA inter here. Some points here and there I may tell. Obviously, I would want that full knowledge to be there, but still, many students feel that their FM at inter was not that great. Doesn't really matter. It doesn't really matter. I may tell certain points. I'll say that you may have learnt it. If you don't get grip there, please tell me then and there. Okay, I'll use the word you may have learned, and you are thinking I learned, but I've forgotten. You ask me, I'll clarify. Lot of things I clarify in detail, but sometimes I feel okay, this is very basic. You may know it, you don't know it, you ask me. Any student who is watching it in recorded mode or live online mode, live online guys, you will have to unmute and ask your doubt. I may not check the chat box at this point of time. And if you are watching it in the recorded mode or later when you watch, anytime you can ask me doubts. My students keep sending me doubts, and most of the time you'll get response from me. 100% you will get response from me. You could have experienced it earlier also. It's not only for my students. I answer even if you're not my student also. So I am going to answer all your doubts, but sometimes I'll cross question you. Moment I cross question you, you stop asking me doubt. That is not okay. Because I cross question you, I want you to do something extra. Because you ask me a doubt, I'll ask you, did you see this in this page? What does it say? He says, okay, this guy is asking me too much. Let us not ask doubt to this person. That is not okay. You are asking me a doubt. I can also ask you something. I'm just asking you, we learned this at this place. Can you open this page? Just see that and explain. Some students, after reading that, they'll say, no, no, we have understood. We don't have this doubt. That is also okay. Some students don't get back also, because they know he's asking cross questioning. We will not question him again. That's not okay. See, I'm telling you, you ask me any number of doubts, be it any number of doubts, I'm okay. As long as it is related to AFM. Even if you ask me on my SCPM subject also, I'll clarify. I have no problem. Others, obviously, I cannot do anything. But and any general guidance you need, I'll again clarify. But ask any number of doubts, but be ready. I may cross question. I may cross question sometimes, saying that, can you tell me what does this mean? That time what do you do? Okay, let's not send doubts to this guy itself. He's just asking us again and again certain extra things. So that is my right. Okay, I can ask you something, you answer that, and you'll 100% get your doubt clarified. There has never been a situation, well, unless in an urgency I missed out your doubt. I normally don't open the message itself. Till I'm in the mindset of answering doubts, I don't open the message. Once I open the message, you will get your doubts clarified. Maximum turnaround time is same day. Maximum. This is outer limit. There are students who get my doubts clarified even in minutes. Okay, you send a message, I'm in that time, I may immediately respond also. Doubts will be 100% clarified, be it class, be it outside class, be it live online, be it recorded mode, be it face to face mode, any mode, 100% your doubts will be clarified. That be very, very clear, because some students, when they, after the class is over, they are little bit hesitant in asking doubts. I will cross question again. I'm repeating, I will 100% cross question sometimes. Sometimes I may not cross question. In fact, off late I've stopped cross questioning because students don't then ask their doubt. So I've stopped doing it, but still I may cross question. I may cross question. If there is a student who is continuously asking doubt, I'll cross question, because I know even if I cross question, he will ask the next doubt. So I may cross question that student. Off late, very rare doubt comes, I may not cross question. But be it, whatever it is, your doubts will be 100% clarified. 100% doubts will be clarified, be it during this period, be it later. Sometimes even students ask me post qualification, I clarify their doubts also. Sometimes they do CFA, they do some other courses, and they still end up asking me doubts. I'll try to clarify most of the doubts. Something is not clear, I'll tell you that, I'll get back to you, but most of your doubts will be clarified. So that be very, very sure, you're not going to miss out. You're not going to miss out on doubt clarification. Clear? So doubts, and in the class here 100% get it clarified now, or if you're in live online mode, you please ask your doubts and then and there, get it clarified, get your doubts clarified. Don't accumulate things. You are a bit hesitant in asking in front of everyone, I may sometimes move around, that time ask your doubt. I give a break in between, that time ask your doubt. In break, if I'm busy with something, I'll tell you I'm busy with something. Post class, ask your doubt. Post class, I'll be there at least for 10 minutes. I'll be there most of the days. 10-15 minutes, you ask your doubts, get your doubts clarified, so that you don't accumulate things. Sometimes I'll tell this concept, wait for some time, you may learn it in 2 or 3 more classes, then ask your doubt. So I'll tell you different things, but your doubts will be clarified. Don't try to accumulate doubts, because accumulating doubts is not good. Students do, lot of students do self study. When they do self study, they accumulate doubts. That is where it becomes little difficult. Otherwise, it is not that the subject is so difficult and all. There are students who still do self study, they are managing it. Some are not able to manage. I, at final level, I went for classes for 2 subjects. One was FR and second one was for AFM. Other subjects I could manage on my own. So some you'll be able to manage on your own, some you may not be able to manage on your own. If you are not able to manage on your own, that is where you're coming here. After coming here, if you're not making utilization, you should keep asking doubts. If it's even 100 doubts, you should ask it. Sometimes I may get tired, but you should not get tired asking doubts. That's okay, that's your right, and it is my duty. It is my duty to clarify your doubts. Again and again I say this, it is my duty. It is, I will have to fulfill my duty, and it is not only till you attend my class, it is post class, till you qualify. I'll try to clarify all your doubts relating to my 2 subjects, AFM. I handle that SPM portion. Even in that, if some students have a doubt, I clarify. So get your doubts clarified. Be very, very clear, because moment you start accumulating things, it will become difficult. Second thing, when I teach some concept, if you find it little difficult to grasp, maybe stop me at that time itself. Say that, can you cut down speed little bit so that we understand it better? Or when I'm in the rounds, tell me that time. But it's up to you how you want my class delivery to be. You will get used to my class delivery in the first few classes. After that though will not be a problem, but initially, if at all you face some hiccups, you will have to tell me saying that, can you cut down pace at some, because I will feel this is a very simple concept, you may feel it is a difficult concept. So your difficulty I may realize sometime, I may not realize. One thing is, I will see you based on your face. Sometimes I understand, but many times it is difficult for me to really know, because some out of the lot, 80% are okay, 20% are not okay. my objective is to ensure 100% satisfaction. That is why I want full satisfaction. I want every student to be happy with the classes, happy, learn. We are going to, okay, in my class it's going to be continuous learning only. You may not see any fun element. Again, I'm saying very, very clear, no fun element in the class. People who have attended my class know very well that it is subject, subject, subject. Here and there I may speak something outside the subject, which is also very rare. It is going to be subject, but I'll 100% fulfill what is related to the subject. Outside the subject, you want to discuss something, you will have to discuss it before, after. Today's session, this happens every time. Today I had my first session. Every time my first session starts, my alarm doesn't ring, I wake up before that itself. So it is continuous pressure. I am under a lot of pressure on the first session, first 15 minutes, because I want everything to go perfect, and I am under so much pressure in my first class because I'll think nothing should go wrong. My laptop should work properly, my projector should work properly, I should come to the class on time, my everything should go perfect, and my delivery should go perfect, my recording should happen perfect. So there's a lot of pressure on the person in the first class. Like that, what I'm saying is, you have that some amount of pressure. If that pressure is not there, then it is, your perfection will not come. One, without pressure, if I take class, some pressure is still there. Every class I'll have that pressure. Okay, every class I want that some amount of pressure to be there. If that pressure is not there, no, then I'll come very relaxed, saying that okay, I know everything, let me do it this way, let me do it that way. Every class, now I have stopped doing it, but earlier and all, every class I used to prepare at least 15 minutes before the class. Now I've not opened the AFM book. Okay, I am just coming directly and doing it. Most of the chapters I'll directly come and do it, because now I know very well what is there in every area. But still, there are chapters where I do little bit of preparation before. Preparation is not to learn the subject. Preparation is to know how I can deliver so that students learn it better. Just because I know it, it doesn't mean that you will also know it. So this is where I keep thinking: should I do it this way? Should I do it that way? Should I do this way? Many of my students come back saying that the first batch which I take of AFM and the fifth batch of which I take for AFM, they'll say there is a lot of difference in the way you are delivering. Reason is, as I see students, I learn something, I change. And for all that, what is critical is feedback. So feedback is very, very critical. We'll be giving you, we'll be asking formal feedback. Formal is, we'll send a Google form, you'll have to fill in that. But more than the formal feedback, if informally you tell me directly, it will be good, so that I do some corrections as and when needed. Most of the times things will go perfect, but still we want you to tell us, so that we are not missing out on anything. Clear? Done. If at all you have any other points, any expectation, you can let me know, so that I try to incorporate that in the class, because otherwise I'm going to go to the subject now. The subject is proper topics we are going to start. Anything else? Clear? Can we start now? Done. Okay, we are going to start with the first chapter today, which is on mutual funds. That is the chapter we are going to start with. I will set initial context as to why we are learning this chapter, and then obviously we will get into other set of discussions which are there. So you will have a concept book, which is a colored concept book, and there is going to be a question bank. These two are what is predominantly going to be used in our classes. Apart from that, there is something called as a theory book, which is in the question bank itself in the end, which I'll tell later what we are going to do. So you can open your concept book if you want, or you can refer the screen. It's all up to you. Okay, refer the screen, refer the screen. You want to open the book, keep it open. Okay, let's first understand why we are learning this chapter. Okay, lot of us, when we start earning, after we earn, there are two things you can do with the money which you have earned. One, you can spend it. Second, you can save it. So when you save money, after saving, there's a next step also needed. Just saving money will not serve purpose. After the money is saved, there is a next step which needs to be performed by most of us. What people do is, they earn money, they spend, they save. If you save and don't invest, then the value of the money will keep going down. We have learnt this as something called as time value of money. In time value of money, you have learnt that the value of the money will keep going down if you don't invest money. So somewhere If at my home I keep 1 lakh rupees physical cash, if I keep this 1 lakh as physical cash and I take this after 10 years, that 1 lakh remain 1 lakh, but the value of that 1 lakh would have become 40,000, 30,000, 50,000 because of inflation. The value of the money keeps going down. So it is critical that a person who earns does two things. One, spending is also good, I have no problem with that. Either spend or invest, no save. Save is not the point. Spend or invest. Investment can be done in multiple forms. There are, my parents used to invest in forms like fixed deposit. They were not comfortable in something called as a stock market. So you can invest in fixed deposit, you can invest in gold, you can invest in silver, you can invest in equity shares, you can invest in corporate bonds, you can invest in cryptos. There are multiple ways in which investment can be done. Now what happened is, I am a doctor with zero knowledge of finance. I am having zero knowledge of finance. So a doctor, when he can't manage his money, he will need somebody to take care of the money. He will need some person who can take care of this money. If I am having any health issue, I may try to do some treatment at home, which is obviously not preferable, but some small ailment I may try to do it at home. When you are not able to get a cure for it, you need to go to a doctor. So a doctor for managing your money is a MF. Doctor for managing your money. When your health is bad, you go to a doctor. Like when you have wealth, you need wealth to be managed by someone. Most of the chartered accountants don't manage their wealth on their own, despite, reason is time constraint. When you are part of a practice, you are in a CA practice, you need to spend time on your CA practice. If you can't manage money on your own, you will give it to a mutual fund. What is mutual fund? I'll discuss in some time. Okay, you'll give it to a mutual fund. Or you are an MD of a big company. He is not going to manage money on his own. He is not going to do investments on his own. He is not going to decide that he has to create an FD, he has to invest in gold, he has to invest in silver. Because I may have the knowledge, I may not have the time. I may have the time, knowledge is not there, and extreme both are not there. Doctor case, if a doctor who wants to manage his money, a doctor or an engineer, he doesn't have the knowledge, he also doesn't have the time. So he will go to a mutual fund. He'll go to a mutual fund and say that I give you this money, you please manage this money for me. So one way of managing your money is a mutual fund, So what does a mutual fund do is, let's assume all of us are having 10,000 rupees and you want to invest. One way is you invest individually. You invest in stock market individually. I want you to invest in stock market. You invest it individually. When you invest individually in stock market, first question will come: which share to buy, which share to sell. What will you do? You may ask somebody and do it, which is not right, obviously. Just asking somebody else are doing. You go to a news channel, some advisor comes, he says buy the share, you start buying it. He sells, sell the share, you start selling it. That's obviously not right, because you are not confident on it. You are just doing what others are saying. Today in class I say buy ICICI share, you suddenly go and buy ICICI share. That is wrong. So everybody has money, but you don't know where to invest. Then what you do, you learnt this entire subject of AFM. After learning the subject of AFM, you understood how to do valuation of company. You do some analysis. After you do some analysis, you are doing this buying and selling. But there's still a problem there. Problem is, your investment value is 10,000 rupees. For 10,000 rupees a month, spending daily 1 hour doesn't make sense, because whatever you do, even if you make 50% return, that extra 1 hour you're spending is not worth. If you're doing it for the purpose of learning, okay, but from an earning point of view, the time spent doesn't serve any purpose. So I want somebody to do research for me. I want somebody to decide the companies to buy, decide the companies to sell. Mutual fund is going to do. So I take 10,000 from all of you and create AFM fund. I just call it as AFM face to face class fund, or AFM this fund which I created. You all are becoming a shareholder of my fund. It's not called shareholder. What is the name? I'll explain as we proceed. But we created a mutual fund today by taking money from all of you. and I am your fund manager. You are trusting me, saying that okay, Dinesh Jain will take care of our money. We have trust in this person. He is going to manage. Most of my investments today, 70% happen through mutual fund route. My personal investments, I don't do on my own. I don't want to get into all this headache. Reason is time constraint. Okay, time constraint is 100% there. So what we do, we take money from all of you, and I will do buying, I will do selling, I will do buying, I'll do selling. And whenever you want, you can tell me that please return my money. I'll return you 10,000 plus or minus something, depending on if we made money, I'll give you extra. If we lost money, you will lose that also. So mutual fund does not mean risk is not there. Only thing is you are not able to do research on your own. There are funds which has collected 1 lakh crore rupees. They have collected 1 lakh crore rupees also. Now, if I have so much funds to manage, I can put a team. I can put a team of some 25 analysts. They can do tracking of different companies. They can do tracking of different industries. So basically, it gives me something called as economies of scale benefit if I'm a fund manager. If everybody is giving me money, and what practically happens is in that research team, out of the 25, 10, 15 can be people like you after clearing chartered accountancy. One of the place where people get employed is you work in a mutual fund as an analyst there. As an analyst there, you are not doing on research on your own. You are doing research for others as part of a corporate, as part of a mutual fund, a place where chartered accountants do work also. So 10, 15 people could be chartered accountants, some could be MBA, some could be other. So all these people are going to do research. When you do research, you are going to spend maybe 1 lakh, wow, sorry, 1 crore a year on research. That is okay. 1 crore a year on managing 1 lakh crore is acceptable. Or 5 crore a year, 10 crore a year, 15 crore a year. That much money can be spent. So what does mutual fund do? Mutual fund is a financial instrument for long term wealth creation as well as short term investment, mostly for long term purpose, but you can do investment also for a short term purpose. What are we doing here? I collect money from large number of investor. From large number of investor, I collect money from all of you. If all of you give me money, if all, let's assume all my students, assuming some 1,000 students give me money, it can even become 1 crore. With 1 crore, I can do some research and all, and then I can do buying and selling. Then it makes sense. You are not doing research, you are telling me to do the research for you and manage the money. Obviously when I'm doing, I'll collect something from you, all that we'll discuss. So what I'm doing, I'm collecting money. I will invest them as per an investment objective. I'll give you only one objective, saying that I will invest in these type of companies. You cannot come back saying later that why did you invest in this company? Why you did all that? I don't encourage. But I will give my rationale. My rationale could be I'll invest in small cap companies. I'll invest 50% in India, 50% in USA. You like my objective? Give me money. You don't like my objective? Don't give me money. My objective will tell very clearly. I invest in bond markets. You like investing in bond markets? I invest in gold and silver. You like it? Give me money. You don't like it? Don't give me the money. I'll give an investment objective. The objective would clearly tell where the money is going to be invested. A broad means I'll say I'll invest 25% in small cap, 25% in mid cap, 25% in large cap, and balance 25 can invest anywhere. That's my wish. You like my objective, give the money. You don't like the objective, don't give the money. So here it is collecting money from large number of people, investing them as per investment objective, and create returns for the investor. Create returns for the investor. Objective is that you will have to create returns for the investor. This is what we are trying to do. Because if let's assume a small example, month opening balance, investment, return, closing balance. It's a small example. I start today with 0 rupees. I invest 20,000 every month. I invest 20,000 every month. Return is what you're going to earn on this 20,000 plus the opening balance. Now, if you create a fixed deposit, you can earn 6% return, or you may earn a 5% return. Mutual funds, there are multiple category, but equity mutual funds historically has given returns of around 12 plus percentage, 12, 15, 18. So let's assume you're earning 1% per month. 1% per month is a very good return. Okay, practical world, people think 1% means what? It's a very small amount, but it's a very good return in a practical world. Assuming I earn this 1% on this 20,000, I earn 200 rupees. I earn 200 rupees, may look very small initially. Just 200 rupees, how does it make a big difference? Now my closing balance is 20,200. This is first month story. Second month, this becomes my opening balance. Again, the amount is not huge and all. Doesn't, you may feel that what is this? Again, I invest 20,000. Every month I may not earn. Some months I may earn more than one. Some months I may earn less than one. But just for a discussion sake, this is what mutual fund is going to do. Assuming I earn this 400 rupees, 200 became 400. Again, it may look very insignificant. After few years, your investment will be 20,000. Return every month will be 20,000. Every month return itself will become 20,000 after few years. After few more years, the return every month can replace your salary. Can replace, you're earning 1 lakh per month, you're earning 1 lakh 50 per month, you're earning 2 lakh per month. It can end up replacing your salary and all. I am 100, I am targeting, see, I was working in a corporate. I stopped that corporate job. Moment I felt the income from my mutual fund can replace my salary. The income from mutual fund can replace my salary. When I felt that, I quit the job. Okay, I still do teaching, but I quit the job when I felt that the income from my mutual fund not exactly replace, maybe some 60-70% of my salary. I felt it is coming to that stage. I felt I'll relax now. So one important aspect is post qualification, or now also when whoever is having that, saying that I want to invest, you should do it through mutual fund. You should do it only through mutual fund, because there is a person who is going to take care of it. He will take care of your investment. You need not do anything. There are people, you look at past performance, look at that, you get some comfort on it, go ahead and invest in mutual, if at all you are interested. I normally tell people to start as early as possible. Why early? Let's assume the story continued for 1 year. When it continued for 1 year, your monthly income is now 2,536. Monthly income is 2,536, and you're still investing 20,000. 1 year got over. Second year, what happened? Your salary increased. Your salary increased. So your 20,000 can now become 21,000 or 22,000 or 24,000 or 25,000. You can obviously increase it. So second year, what I did is I made 22,000. I made it as 22,000. This story continues for 1 year. Your 2,000 monthly income now may touch 4,000. And if it may end up touching 8, it may end up touching 16, it may end up touching. So like this will keep happening, and at some stage it can replace your salary also. It can end up replacing your salary also. See, earlier and all, people were saying that they'll work till 60s, 65. Now the current set of generation wants to retire as early as possible. They want, when I say retire, it's not that you are not going to do any working. You may do something which is really passionate about for you. Money may not be that critical factor at that point of time. So that is only possible when you make money work for you. Making money work for you is what this chapter is all about. This chapter is making money work for you. If this story continues for one more year, 16th month I've done, 24th month, monthly income is 5,648. Monthly you will make 5,648 in 2 years. First year, when I started, it looked insane. Don't look up at the numbers, okay? Don't worry about the numbers. Just understand the crux. The crux is, when I started, 200 per month I was earning from mutual funds. Became 2,500 by the end of the year. Now became 5,600 by another year. Now again, one more year is over. You may still increase your SIP if possible. Your 22,000 can become now 24, 25, 30, 35. It all depends. It depends on person to person. Somebody may not be able to increase it also. Not increase also, it's okay. But what I'm trying to say is, if this story continues, for some more years, if you continue this for maybe 10 years or 5 years, your investment figure, this is at the end of 5 years, okay, at the end of 6 years, I'm showing you 72nd month, 25,000 is the monthly income from mutual fund. 25,000 is the monthly income from mutual fund, and you are investing now 30,000 per month. Story continues for some more time. What you invest will be lesser, what you earn will end up becoming higher. This is possible only when you do systematically. When you have your own funds, when you invest on your own, what happens is you are not silent. You keep thinking, okay, it has gone up, let me sell it now. It has gone down, it has gone up, gone down. You think a lot and you start taking a lot of actions. Because practical world, what people say is buy, hold for a long period. That holding capacity is very limited for many people. Emotions. Moment you bought a share went down. You become emotional, saying that why did it go down? I bought a share, I did so much research. Why did it go down? Suddenly you start selling it, which is where a fund manager is there. The fund manager is saying, I don't want your emotions and all. You give me money, you keep investing. I keep continue doing SIP now also. I do SIP now also. SIP or mutual fund is one easiest way of doing long term compounding. This story, if I continue for few more years, you will see your salary income touching your, it all depends on how aggressively people invest. There are people who do not have any expenses. I know set of people. I do MF advisory for clients, so I there are set of my own students who have become my clients as of now. 90% of their salary they invest. 90% of the, it all depends on what commitments you have. They did not have any commitment, so they were able to invest 90%. I'm nowhere saying that you need to invest more, you need to invest less. Only thing I'm trying to say is this chapter, we are going to learn how mutual funds are going to work. And this is one important piece in the entire practical world. Any place where you can assist people is on the mutual fund side. So if at all you want to assist people, like people ask you doubt on direct tax, indirect tax, people will ask you doubt on shares, which you may give some answer, but right thing where you can assist people is mutual fund. Understanding, if you have a mutual fund, you can assist people, you can tell them that this is a very important instrument from a practical world point of view. If this instrument was not there, I wouldn't have quit my corporate job as of now, because I would have put it in a fixed deposit. FD may not give me that much return, but this gives little bit higher returns. It has given very fantastic returns to me in the past, and it will give future also. It will keep giving. 12% is the minimum. Earlier, in fact, a lot of other benefits were there. Taxation was not there. Unfortunately, they have brought in taxation, but still for long term, as I run this, if I keep doing this for more years, you will see this touching 1 lakh per month and all. So it is, maybe I've pulled it to some 20 years, it is now becoming 5 lakh per month. I've pulled it to 20 years or so, it is becoming 5 lakh per month, it will become 3 lakh per month, it will become 4 lakh per month. You are investing less, what you will get back can become as high as that. And at a stage where you feel you are comfortable, don't worry about those numbers. Okay, students, just focus on the number, it's a story, because without numbers I can't, if I keep telling story you don't understand. So the story is very clear that this is a very important instrument from a practical world point of view. Like, you need to take care of your health, somebody has to take care of your wealth. And for taking care of wealth, the most important person is going to be mutual fund manager. MF manager is going to be the most important person to take care of your wealth. Despite you becoming extremely good in the subject, having good knowledge, you may still use this. Many people in their articleship itself start investing in mutual fund. It all depends on money available, invest. Not available, wait, that's okay. But the point is, this is a very important instrument from a practical world point of view. Now let's understand how a fund is created. We'll understand this, then maybe take a break, and then I'll keep proceeding. Okay, so MF introduction, in bracket I've used the term financial doctor. Financial doctor for managing investor money. I keep saying that health, you need to go to a doctor. Wealth, you need to go to a mutual fund manager. Wealth, you need to go to a mutual fund manager. The right person is this guy. Now, how is it created is, let's take an example. ICICI Bank. ICICI Bank wants to manage money of so many people. So they will not do on their own. They will act something called as a sponsor. Practically happened. Okay. ICICI Bank will act something called as a sponsor, and they will create a fund management company called as ICICI Asset Management Company. ICICI, practically this company exists, exact name maybe ICICI Prudential Asset Management Company, but practically this name does exist. So they will create ICICI Asset Management Company. This asset management company will employ people like you, people like me, and make one person as the fund manager. They will have multiple schemes within them, saying that I have a scheme where I invest in gold, I have a scheme where I invest in silver, I have a scheme where I invest in India, I have a scheme where I invest in China, I have a scheme where I invest in US. So multiple schemes a fund may create. Sometimes a fund may create even 10 schemes, 20 schemes, 30 schemes. So the AMC creates all these schemes. You liked 2, 3 schemes. They will employ a lot of people. After employing all these people job is to do research. They are going to do research and take care of your money. So there will be a person called as fund manager. This person will have a lot of people to help him. When you are doing all this, obviously you are going to incur expenses. You are going to incur expenses. The AMC is going to incur expenses. What expenses it will incur? It will incur rent, it will incur audit fees, it will incur consultancy fees, it will incur legal fees, it will incur documentation fees, it will incur employee salary. Lot of expenses will be incurred. Who is going to pay for all this? You need to pay. You are the person who is going to give me money. So when you give me money, out of your 10,000, I'll keep 10 rupees aside. Practically don't keep it aside, but 10 rupees aside to take care of my expenses, to take care of the expenses. 10, 15, 100, 200, 300. Some part of your money will be used for my expenses, and I recover it as part of something called as expense ratio. You'll understand these terms as we proceed. But I am going to recover the money which I spent from whom? From people like you who are giving. When you give, who are giving? Investor or unit holder. Your name is investor, other name is called unit holder, not shareholder, because in mutual fund we don't call it as number of shares, we call it as number of units of mutual fund. We call it as number of units of mutual fund. So when you buy ICICI bank, they'll give you ICICI shares. When you enter into any mutual fund, we'll give you units, MF units. So you are called unit holder and not shareholder. For all practical purpose, you are the owner of that mutual fund, of that scheme, not that AMC. Okay, scheme. AMC is separately listed. Okay, AMC can be separately listed, and you can become a shareholder of the AMC also. You can become a shareholder of the AMC, saying that I like this AMC, it is managing money, it may grow well. If it grows well, share price may go up. So you can become a shareholder of the asset management company, which is different. You are going to become a unit holder of the mutual fund, unit holder of the mutual fund. And all this is happening because the MF is handling public money. It is handling public money. We want to be doubly, triply sure that they are not doing any fraud activity, which is where a trustee may sit on top of me. Trustee is going to ensure that MF operates in the best interest of investor. The MF is operating in the best interest of the investor. So otherwise what will happen? I may do some fraudulent activity. If I do any fraudulent activity, who will get suffered? The suffering will happen to a lot of investors. So I don't want that to happen. So the SEBI, or the Association of Mutual Funds of India, has certain restriction. In that, one of the entity is going to be trustee. It just ensures that the mutual fund is operating in the best interest of the investor. These are the few set of people who are needed to create a mutual fund. One, there should be a sponsor. I cannot create a Dinesh Jain AMC because people, maybe you know me, but at an overall practical world, people may not be interested in Dinesh Jain AMC funds because they may not give me money. So I need a credible person, which can be an ICICI bank, can be an HDFC bank, can be a LIC. LIC also has a mutual fund. So whoever is a credible person, they'll act as an initial sponsor, give some capital, and say that they'll create an AMC, and this AMC, some shareholding will be there from the sponsor side, and practical other shareholders can be there. And I float a scheme. When I float a scheme, it's called new fund offer. Like you have initial public offer for IPO, here it is called new fund offer. New fund offer. So I'll say Dinesh Jain is introducing a new fund offer. This is for people who are interested in long-term story of India, We are going to invest in small cap, mid cap, and micro cap companies. Our investments is going to be minimum 25% in this category, maximum is going to be 50% in one category. You like it, please subscribe to our fund and give us money. You don't like it, you will not give us money. Once you give us the money, I have a research team which does research. They tell me which companies to buy, whatever I'm talking is about an equity mutual fund. There can be a debt mutual fund. Debt mutual fund will invest in debt. There can be a gold mutual fund which just invest in gold. There can be a silver mutual fund which just invest in silver. So a lot of categories of MF are there. But research, I'm talking more from an equity point of view. So I will do research, invest in invest in equity mutual funds and create returns for you. Whatever expenses I incur, I recover it from you. When I say recover it from you, I recover it from the returns which I have to give you. I have to give you returns. No, in that returns, I'll remove that and take it. If negative is there, still I'll remove and it will become higher negative for you. It will become higher negative for you. Clear? Any doubts on this? This is a basic structure. Why is this needed? Visualize this post your qualification. So if this has to happen every month, you want to earn return and you want to retire early, this is one instrument. I started with an example of 20,000, but if you do aggressive investment, you may get to a retirement goal maybe in 10 years. Very aggressive, people may get it even earlier also, but normally 10 years is the time period if you go very aggressive in your investment. It all depends on your commitments, but if you invest a good amount, your salary income can get replaced with monthly income from mutual fund. Moment it gets replaced, you take a back seat, you start doing certain other activities. People don't stop earning. Okay, so when I stopped also, I got into teaching. You may have some other passion of yours, or you may follow something which gives you money, as well as you're able to utilize your time the way you want. See, point is, there's something called as financial independence and retire early movement, something called as fire movement, which happens in the practical world. The movement is very simple. It just says that you have to retire. Retire does not mean you stop earning. Retire basically means I can decide whether I want to work today or not work today, whether I want to do something today, I don't want to do something. This batch is over. After the batch is over, I'm not in some good mood for next 3 months. I don't want to do anything. I will not do a batch for 3 months. So that flexibility is what is available to me. When you are part of a corporate, obviously that flexibility is not there. So if you want to move towards this financial independence and retire early movement, somewhere this is the most important instrument. The mutual fund is a very significantly important instrument from a practical world point of view. So I've given you initial context from a practical world point of view. We'll be taking a break. After the break, I'll just discuss on whatever related to the subject now. So whatever I've explained now may not be that much useful from an exam point of view, but it's an extremely important instrument. Some of your parents may be investing in mutual fund. Some may not have done it. Try to educate people, because as you educate people, first you need to be aware. Once you are aware, you try to educate people. When investment happens, returns get generated, and it makes us closer to getting something called as fire, financial independence and retire early. Clear? Okay, let's take a break of 10 minutes and then we resume. Okay, let's now get into some concepts from your subject. First concept is MF return versus individual return. I'll explain the concept, then we get into question solving around it. Now, what is MF return versus individual return is, when I invest in a mutual fund, if I want to earn, let's assume 10% or 12% or 14 or 15, the fund has to earn more than this number. Reason is, the fund incurs certain expenses. So the mutual fund will incur expenses. Post the expenses, it will give you the return. So assuming I want to earn 10%, I want the fund to earn 11-12% so that I get 10%. This is what the concept is. What return should a mutual fund earn so that it gives me the specified percentage return which I want? There are two situations in this. One is called without opportunity cost and one is called with opportunity cost. I'll explain with in some time. Let's assume I am a chartered accountant. After clearing chartered accountancy, you feel you can invest on your own. If you invest on your own, what will you do investing on your own? You will invest in stock markets. That is, you directly invest in shares. When you do this, you will earn 15% return. You're going to earn 15% return if you do investments on your own directly. MF is also earning 15. But if MF earns 15, I'll get only 14 or 13. This concept basically says return to be earned by the mutual fund to give the same return which an investor would get on his own. This calculation is done by the MF at his end. Practical world, what MF earns you will never get to know. What will you get to know is what ultimately is given to you. Ultimately, they'll give you 12%, 13%, 14%. This is just a reverse working here from a fund point of view. Now, as I said, when a fund starts managing money, I need a team to manage it. When I need a team to manage it, I have to pay him salary. There are rental expenses. So a lot of expenses need to be incurred. Lot of expenses need to be incurred by the fund. Who's going to pay for all of this? We as investors need to pay. So annual expense ratio or recurring expense ratio incurred every year to meet the regular expenses of the mutual fund such as salaries, rent, commission, etc. As per Association of Mutual Funds of India, there are restrictions on this ratio. What is restriction is every company, every AMC has to declare what will be their annual expense ratio for the next year, and you need to ensure that you are within that limit. Otherwise, you will end up taking lot of money from the investor. So there is a limit. There is a limit on you have to disclose it. I keep getting messages from my AMC that they're revising the expense ratio. You have to revise it before the expenses are incurred. There is tight control on the expense ratio. So AER, annual expense ratio, recurring expense ratio, or total expense ratio. Three different names are there. There are restrictions on this in the practical world. So first thing I want to know, what is this expense ratio? Why are we knowing this? You'll understand. First thing I want to know this. Second thing is, whenever I start a mutual fund, there is something called as an initial expense ratio. This is just a one time amount. This is not going to come again and again, again and again. It's not going to come, but it is incurred once. What is incurred once? When I want to do an IPO, when I want to do an IPO, I will have to incur prospectus cost. I may need an underwriter. I may need that whatever certain other expenses are there. We incur a lot of expenses to do a public issue of share. Similarly, if you want to issue mutual fund, you have to do a new fund offer. So when you are doing this new fund offer, you're going to incur initial expenses. Like in IPO, it is so like for a company, it's called IPO. For a mutual fund, it is called NFO, new fund offer. You are going to incur a lot of expenses in the start. One time expense incurred to start a mutual fund during the new fund offer. Now, what does concept says? I have 100 rupees today. This is the money available. I can invest on my own. If I invest on my own, I'll earn 14% on this. 14 rupees. This is what I can earn my own. 100 into 14%, 14 rupees. You gave the funds to me. When you gave the funds to me, unfortunately, it became 95. It became 95 because 5 rupees expense ratio. First time. First time there is some expense which I incur during a new fund offer. 100 became 95. You in your mind is very clear. You want 14 percentage or 14 rupees. You are least interested in all these terms called annual expense ratio, recurring expense ratio, initial expense ratio. You are saying 100 rupees if I invest, I earn 14%. 14 rupees is my earning. 95 I invest, I'm least bothered. I want same 14. Can you tell me 95 into what percentage will be 14? Do cross multiplication. 95 into what percentage is 14? Calculator. Please use a calculator. 95 into what is 14? 14.7? Okay. 14 divided by 95 basically. 14 divided by 95 into 100 to express in percentage. 14 divided by 95 into 100 to express in percentage. How much you said? 14 point. So first thing is, if I want to give you 14%, you give me 100. Practical world, I may get 100 as 99, 90. It may not be such a huge difference, but still, you gave me 100. Your mindset is clear. You want 14 rupees. Your mindset is not 14%, 14 rupees. You want 14 rupees. When it came to me, unfortunately, money came down. It became 95. The first part of the formula says something called as 1 minus IER. Don't write the formula. Formula and all is there. Nothing to be written. If at all you want to write, write in the concept book itself. Okay. Understand what I'm trying to explain. Don't write it. It's there in the concept book. You still want to make notes, you make it. But just first understand things. Okay. Denominator is 1 minus initial expense ratio, and numerator is called own return. What is own return? You can earn 14%. I'll write this decimal, okay? 0.14. Percentage, sometimes you may make a mistake. 0.14. 14% return you want. Divided by 1 minus IER. What is IER? Is initial expense ratio, which is incurred once. That is 5% here. 100 became 95. 0.05. Calculator, divide this and tell me. 0.14 by 0.95. 0.14 by 0.95. Point, give me a 4 decimal answer. 0.14. Round up property. Okay, 7473. You just check it. Okay, 1474. So first thing I'm explaining is 100 rupees is the investment. You want to earn 14%. Your mind is very clear. Give me 14 rupees. You're not interested in. I say I have an initial expense ratio. You're saying I'm least bothered. Give me 14 percentage or give me 14 rupees. So I have to now earn more than 14. Why more than 14? Because I don't have that 100 rupees. I have only 95 rupees or 96 rupees. So I am forced to earn 14.74. I earned this. I was happy with 14.74. Unfortunately, when I'm giving this money to you, there is a recurring expense which is deducted from this. There is a recurring expense which is deducted from this. You are very clear. You want 14%. I said I'll earn 14.74 so that it looks like 14 to you. Ultimately, I'll be giving only 14%. I am earning 14.74 on 95. And you are getting 14 on 100. You are getting 14 on 100. So you became happy. I'm also happy. But unfortunately, there is an extra expense. So formula says don't earn only this. Along with this, earn recurring expense ratio. This is every time. You earn extra 1%, 2%, 3%, 4%, 5, 6, whatever number. Earn extra. Don't remember the formula. Understand the logic. Okay. Understand the logic. Logic is you wanted 14 on 100. I am giving 14.74 on 95. I am giving 14.74 on 95. We are happy as of now. But then you are saying, when I started giving this, 14.74 on 95 is 14 rupees. I was giving you 14 rupees. Suddenly somebody took away 2 rupees from there. Reason is rent, electricity, all those expenses are there. So concept says individual return divided by 1 minus initial expense ratio and add annual expense ratio. Add annual expense ratio. This has to be added in the formula. This has to be added in the formula. Able to understand till this? Why we are earning this extra? This extra is because every year I incur. Practical world, the formula is individual plus AER. That 1 minus IER is very insignificant. You can, all practical purpose, ignore it itself. So what I have to earn is what? Individual return plus the annual expense ratio. This is from a practical angle point of view. But from an exam point of view, your formula is individual return divided by 1 minus initial expense ratio plus annual expense ratio. Should you remember the formula? No. Logic is what I have explained you. I will go through logical route most of the places. Some places I'll tell you remember the formula. That time alone you try remembering the formula. Any doubts till this? Clear. Now let's understand, let's apply our understanding with that example 1 given below. Now you will write along with me, okay? Example 1. Mr. X can earn a return of 12% on own. Initial expense ratio 5%, annual expense ratio 2%. How much should the MF earn to give investor return of 12%? So in my concept book, what I do is I explain concept. Every concept will have some MCQ examples below it, most of it. Some may have, some may not have, but most of it you will see the MCQ example. Purpose of MCQ example is not your ICI MCQ answering, okay? That I'll explain later. This is just to test your concept clarity, whether to test your, somebody has read it, he feels I know everything. Please tell me whether you know everything or not by solving that below example. By solving the below example. In revision phase, I just want these examples to be solved. I don't want the descriptive bigger problem. Bigger problem solving we will do limited. In a class I'll do everything, but when you do your revision, this book is most important. The most important book is going to be your concept book. There is an example given. This example, if you're able to solve, great. In class, 2-3 things I'll tell you. Whenever I discuss a question, if you know the answer, don't wait for me. You write on your own. I used to do this in my classes. In my classes, I never used to wait for the faculty. I used to solve it maybe 50% time right, 50% time wrong. Wrong is okay. I used to then cancel it. When you cancel something and then redo it, your learning is always better. Your learning is always better when you make mistakes. So if you feel some concept is clear to you, don't wait for my instruction unless I say listen, listen. Sometimes I'll say please listen for some time. That time please be in attentive mode. Else you understood this example, you do on your own. That's up to you. I'll 100% do it, but I'm saying you, sometimes if you want to try something on your own, try it. Many people say that I want a perfect notebook. Don't wait for a perfect notebook. Please don't have a perfect notebook. Doesn't really matter. Because in my material, I'm giving you questions. I'm also giving you answers. If I give you only question, then having a perfect notebook makes sense. Most of the students in the revision phase will use their notebook, but most of the time they'll use directly the workbook because it has question as well as answer. So don't wait for a perfect answer. You know something, try it out. You don't know something, wait for me. Wait for me if you don't know something, but if you know something, you try, you get a wrong answer, doesn't really matter. Now write. MF return, MF return is equal to, MF return is equal to own return divided by 1 minus initial expense ratio plus annual expense ratio. 1 minus initial expense ratio plus annual expense ratio. Plus annual expense ratio. How much is the fund manager, sorry, Mr. X going to earn on his own? On his own is 12%. On his own is 12%. He has to earn 12% on his own. You could have got to the answer. Whatever I asked, just answer that as of now. 12% he can earn on his own. I'll write it as 0.12. My sincere request, don't write percentage. Sometimes you'll end up making a mistake. Sometimes mistakes can happen. I'll prefer you to do decimals. Final answer will convert into percentage. Divided by 1 minus, what is the initial expense ratio? 0.05 plus, what is the recurring expense ratio? 0.02. 0.12 divided by 1 minus 0.05. Divide, give me a 4 decimal answer. One, no, before 1263 plus 0.02, final answer. Okay, 14. Final answer is 1463. Final answer is 1463. Any doubts on this? Any doubts on this? Now you convert this into percentage. I want the fund manager to earn 14.63% so that he can give me 12%. So that he can give me 12%. Any doubts on this? This is one simple concept. First concept is something called as without opportunity cost. What is with opportunity cost? I'll explain. Any doubts on this first? 14.63% is what? Is what the fund is what the fund should earn so that I get how much? 12% return. Any doubts on this? Okay. There's a second element called with opportunity cost. What is this with opportunity cost? Let's understand it. I can earn 12% on my own. MF can give me 11%. MF can give me 11. 11 is after all expenses, their expenses. Okay. Practical world, maybe this 11 is better than this 12. Maybe why, I'll explain. This 11 could be better than this 12. Maybe I'll explain it. Okay. If I do on my own, I can earn 12%. If I give to fund manager, he'll give me 11% return only. After all the expenses, 11% return. Historically, this is what is happening. Reason is, if I do this, I have to skip one AFM batch. I cannot take one AFM batch. I wanted to take one more batch, but I cannot take that batch because I have to do a lot of research now. I have to do research now. When I do research, obviously I'll have to compromise somewhere. So I said I will not do one AFM batch. If I don't do one AFM batch, I lose money in that. I lose money in that. That is called opportunity cost. That is called opportunity cost. Many people see, if I do invest on my own, I may earn 20% and all. But MF may give me 12-13%. I'm still okay with that 12-13% because on my own, doing that research will cost me something. It will cost me something. What it can cost for me, I may have to stop one AFM batch. Or if I'm in CA practice, I may have to cut down on my practice income or my professional income. Something can happen. So, should I compromise that and earn the extra return, or be okay with a lower return? Which is better? I have to do a cost benefit analysis. I have to do a cost benefit analysis. I cannot say that I will say earning 12%. Can the MF give me 15, 16 and give me 12? No, I don't want that. I have to do only here what? Something called as a cost benefit analysis. Why is this happening? Because every person will have some work in the practical world, unless you are saying you're totally free. Totally free is a different story. If you're totally free, then do investment on your own, no opportunity cost. But practical angle, there can be an opportunity cost. A person is required to spend time while investing on his own. However, investing through mutual fund will save this time, will save this time. Hence, the same can give extra income to the investor. It can give extra income to the investor. If a question gives data on this, we should do a cost benefit analysis. With a formula, I cannot decide, because with a formula, see, for example, last question 12 and 14.63. If I earn 12, MF has to earn 14.63, then only I'll take MF. MF earns 14.63 and then gives me 12. MF earns only 14%. I'll not go with MF because he will give me only 11 and a half or 11. I'll not go with MF if MF is earning 14, because what I will get is only 11.5 or 11. I want MF to earn 14.63, give me 12. Then you're bringing another angle. What is the other angle? You are saying you are doing this work. No, because you do this work, you are losing one batch of AFM income. If you lose this, how much is that opportunity cost? Let's assume 2 lakh rupees, 5 lakh rupees, 10 lakh, whatever number. Loss in return is 1-2%. How much is that? Maybe my portfolio size is huge. I may decide still to earn 12% and not 11%. I don't know. I'm just giving you an example. Only point I'm trying to say is there can be an opportunity cost angle in the practical world. And does it happen practically? 100% it will happen, because somebody cannot invest just randomly. Investment can't happen. You have to read newspapers, you have to read annual reports, you have to go through their calls. All this will need 1 hour a day, 2 hour a day, 3 hour a day, 4 hour a day. You are not able to do it. That is why MF is doing for you. MF guy is doing, the analyst who is working there is going to do all these things for you. So for that, you are paying that extra price. Sometimes I could be okay with a slight lower return also. I could be okay with a slight lower return. Clear? Any doubts on the concept first? This, I have example 2. You will do example 2 at home just to understand that example. Okay. I will do it as a descriptive question. We'll do it as a descriptive question. I'll do a mix of descriptive, mix of MCQ. MCQ, whatever I don't do, you practice so that you get grip. Same examples you are going to find in the descriptive part also. Now go to question bank. Let's come to question 1. Let's come to question 1. Page 180, question 1. Okay, I'll start. Mr. A can earn a return of 16% by investing in equity shares on his own. He is considering a recently announced equity based MF scheme in which initial expense 5.5%, recurring expense 1.5%. How much should the fund earn to give Mr. A return of 16%? I am not doing it. I give you exactly 3 minutes. You do on your own. After 3 minutes, I'll explain the answer. I will do, but after 3 minutes, you please do on your own. Write in your notebook. Don't wait for a perfect answer. Okay, 3 minutes for you. Okay, I'll start discussing the answer. I think most of you would have done it, but still, I'll discuss the entire solution. Formula remains the same. MF return is equal to own return divided by 1 minus initial expense ratio plus annual expense ratio. How much is the investor earning on his own? 16%. So he would want to earn 16%. We need to earn more than 16. What is the initial expense ratio? 0.055. 5.5%, 0.55. What is the recurring expense ratio? 0.015. 0.1. If you divide this, give me a 4 decimal answer. 1693, 16.93% technically this part. Added 0.015, put together 1843 or 18.43%. Any doubts on this? Clear? Understood this? Okay. What ICI does, let's understand. If they want to make the paper difficult, same question, they'll ask in a little different manner, and which is where sometimes students find it little difficult to grasp. This example which I'm going to give will be easy to understand, but sometimes students will find it little difficult to grasp the question which is altered. They'll just alter the question a little bit. Now, right, how much, how much, how much can be the annual expense ratio? Can be the annual expense ratio if MF can earn 18%. If MF can earn 18%, how much can be the annual expense ratio if MF can earn 18%? Let's write the same formula. MF can earn 18%. This is what ICI will do in case they want to twist a question. This is called reverse working, where your mind is tuned answering MF return. I'll give you the MF return. You do reverse working and get the other answer. You do reverse working and get the other answer. Right, this side 18%, 0.18, 0.18. Own return is how much? 0.16 divided by 0.055. AER is balancing figure. Annual expense ratio is balancing figure. These are usual things which ICI does in exam question. If at all they want to make a tricky paper, and sometimes because of exam pressure and all, students find it little difficult to grasp these things. Normally, I give you the answer, I give you the question, you get the answer. Reverse working is I give you the answer, you get back to the question. So missing information will be what is normally given in the question. So here 0.18 minus 0.1693 is equal to AER. What is the AER number? 1.07 percentage. 1.07 percentage. Same 0.1693, I take it to the other side. Same 0.1693, I take it to the other side. 0.18 is equal to 0.1693 plus AER. This part is 0.1693. We take this 1693 to the other side, it becomes AER balancing figure. Any doubts on this? Any doubts on this? Can you proceed? How much? How much can be the initial expense ratio? How much can be the initial expense ratio if MF can earn 18.25%? How much can be the initial expense ratio? Initial expense ratio if MF can earn 18.25%. MF can earn 18.25%. Let's write the same formula. MF return, own return divided by 1 minus IER plus AER. 1 minus IER plus AER. Own return divided by 1 minus initial expense ratio plus annual expense ratio. We'll have to be a little bit careful because you will have to use your max understanding here and then get to the answer. What is the MF return I've said? 18.25, 0.1825. Own return 16. 1 minus IER, leave it as it is. AER is how much? Original AER 0.15. Original, okay. Always any rework is on part of original question. Take this 0.15 to the other side. Take 0.15 to the other side. 0.1825 minus 0.015. Clear? Take 1 minus IER to the other side and take this to this side and you'll try to get the answer. So 1 minus IER comes this side. What is 1825 minus 0.015? 1675. 0.16 divided by 0.1675. How much? 0.552. Okay, 0.9552. 0.9552. IER is balancing figure. The IER is balancing figure. Our mindset is they will give everything, we will calculate MF return. This is what students assume. In case they want to twist a question, which will happen out of the 100 marks paper, 15 marks they'll get into reverse working. One attempt they made 70 marks reverse working. Students found it very difficult, that paper. They found it very difficult because entire 70 marks was reverse working. Entire descriptive almost reverse working. They made it entire descriptive fully reverse working. So then you find it very difficult because you are used to thinking this way. When you have to think the reverse way, it becomes little challenging at times. So what is IER here? 448 or 4.48 percentage. Any doubts on this? Any doubts on the concept here? 4.48%. Any doubts on the numbers? Calculator is mandatory in first class. If you have not brought it, please bring it from the next class. You want to use your mobile phone today, use it. If you have not brought calculator, use your mobile phone today. But next class onwards, calculator mandatory. 4.48%. Any doubts on this? Understood this? I give you again a minute, not a very difficult concept. Go through the solution. In case you have doubt anywhere, tell me. 1 minute for you to go through this. Anywhere there is a doubt, you let me know. Let's go through question 2. Okay, you need to do this with every question. In your question bank, please pick easy, moderate, difficult, whatever is your wish. Okay, easy, moderate, difficult, your wish. Okay, every question you have to do this. Okay, I will not tell you after this. Every question tick easy, moderate, difficult. There is some space given there. This space, when I give you that 1 minute, 2 minutes, you want to write it that time, or at home write it. Okay, if at all you want to write something there, this will become the most important for you during your revision phase. That easy, moderate, difficult tick and the key adjustments which you write in your own handwriting, not mine. I'm telling will not serve any purpose. Okay, because this question I'll say is very easy. Somebody may feel it's moderate. It's your wish. Okay, I will not tell you the rating. You want to classify easy, classify easy. You want to classify moderate, classify moderate. You want to classify difficult, classify difficult. I used to tell this to the students that you have to do marking, but I never used to follow up. So in this batch, I have created a table itself below the question so that it highlights you every time that you do a question. You have to put a tick after the question is done. If you have found it very comfortable, please put easy. Okay, don't put everything as moderate, difficult and all. If you have found question to be easy, this ideally is an easy question, but in case you have a different rating, that's up to you, but mark it. Okay, why is this done? In your first revision, you will not look at any of the easy question. You will not look at any of the easy question. Don't waste time on your easy question. First revision, moderate, difficult. Second revision, only difficult. Second revision, only difficult. Students expect me to give a priority material. I give it now also. Now also I'm giving it. But if you create your own priority material, nothing can beat that. Nothing can beat if you can create on your own. When you create on your own, you will mark something as easy, I may say it is moderate. You may mark something as difficult. I may say it is easy. So my marking is based on my understanding. Your marking is always better. I may release a priority material for every attempt that you can see it. But along with that are only, this is very critical. Your own marking. Not only for my paper, this you should do ideally for all practical papers. All practical papers, because if I tell you, you have to revise my entire AFM book. Difficult. Concept book possible 1.5 days before exam, with select question possible, select question possible, every question not possible, every question is not possible. So please do the marking. I'm telling you here, after as I do question, I'll stop telling you saying that do the marking. You have to voluntarily just put a tick. Earlier student had to write, I don't know, they were not doing it, so I said okay, let me put it in the book itself so that they'll at least do the marking. Now this also if you don't do, I'll get irritated. This is really, I have tried giving everything to you. Your job is just to put a tick, easy, moderate, difficult. If you tick easy, moderate, difficult after maybe 1 week or 2 week, you will do wrong marking. Today you will do the correct marking because you know what it is, easy or moderate or difficult is known to you. Today it is easy to do the marking. Later you do the marking, you're just going to waste time. In that also, when you do moderate, difficult, ideally you should write where are you facing the difficulty, where you are facing the difficulty. If you write it saying that okay, in this question the calculation of this was little challenging, so that during revision phase you will prioritize exactly that area. Clear? Let's go to question 2 now. Mr. Alex, a practicing chartered accountant, can earn a return of 15% by investing in equity shares on his own. He is considering a recently announced equity based MF scheme in which the initial expenses are 6%, recurring expenses are 2%. How much should the fund earn to provide Mr. Alex a return of 15%? Mr. Alex current professional income is 40 lakh, portfolio value 50 lakh. He is spending 10% of his time, 10% of his time to manage the portfolio. If he spends his time on profession, his professional income, his professional income will go up in same proportion. Income will go up in same proportion. He is thinking to invest his entire portfolio into a multi-cap fund, which is earning 13% per annum including dividend. You are requested to advise whether he can invest in the portfolio. If so, what is the net financial benefit? I give you a minute, you go through the question and then we will start doing it. Okay, you go through the question once. A minute for you. Okay, first part of the question is a formality which you know. Anyway, we will do it together. You can do on your own also, but I'll do it now. Second part is where I have to explain that opportunity cost concept. Let's do part 1. Part 1. Part 1. Let's write the formula. MF return is equal to own return divided by 1 minus initial expense ratio. In exam, don't write the short form and all. Okay, in class I'm writing it, you write full name only. Initial expense ratio, annual expense ratio, annual expense ratio, 1 minus annual expense ratio, initial expense ratio. How much is the own return of the investor? 1.5. The initial expense ratio given in the question is 0.06. Annual expense ratio 0. Okay. First one is what? 0.15 divided by 1 minus point. What's the number you get? Divide 1596 plus 0.02 1796 17.96%. This is part 1 answer. This is formality. I'm doing it for the third time now. We're just doing the same thing for the third time now. 17.96%. Any doubts on this? Clear? Part 2. Part 2, which is where some discussion is needed. Now, Mr. Alex. So this is, you look at the last question, that was a study material question, SMTYK question number 1. So all our questions are reference to your study material. You want to, what you can do at home is for your satisfaction, because students don't get satisfaction like this. So open your study material and tick that question number 1 also, saying that we have done it in the class. Otherwise you will again waste time in study material. I know many students do it. I don't want you to waste time in study material. So open the study material at home, put a tick, first question is done, exact same question is copy pasted. This, when it came in November 2019 exam, ICI added the second part. ICI added the second part. First part is study material. Same part got repeated. But second part is where they twisted something. Now what they're saying, Mr. Alex current income is 40 lakh rupees. If his portfolio value is 50 lakh and he's spending how much time? 10% of his time to manage his portfolio. If he spends this time on profession, his professional income will go up in the same proportion. He is thinking to invest into a multi-cap fund, assuming the NAV will grow at what? NAV will grow at 13%, means final return given to you, not what MF is earning. MF could be earning 15, 16. MF is finally going to give you how much? 13%. What is NAV and all, you'll understand in some time. Okay, maybe in second or the third session you learn. The MF is going to give you how much? 13%. You got irritated saying that I can invest my own on own and earn how much? 15%. Now we need to decide which is better. We need to decide which is better. Investing on own is 15%. MF will give me how much? 13%. Maybe 13 is still better. I don't know. That is where that opportunity cost angle is coming into picture. Before I do the calculation, I'll just explain in a timeline approach. Listen, two things are there. Own investing, MF investing. In MF, I earn how much? How much is the return I earn? 13%. Here I earn. So obviously own looks better as of now. In own, let's assume I have 100 hours. I have 100 hours. I can spend only 90 hours on my profession. I can spend only 90 hours on my profession. 10 hours is spent. 10 hours, this is for profession and this is for investing. This is for investing. With 90 hours of time, we were earning something. If we could spend 100 hours, we will earn more. We will earn more. That is the extra benefit of mutual fund investing. That is the extra benefit of mutual fund investing. If you do mutual fund, 100 hours profession, 100 hours on profession. Will it become 100 hours? No, it may become 95 or 97 or 98. You may still spend 1 hour, 2 hours on managing your MF also, where to invest in MF also, but that is a very insignificant time. They have not talked about all that. Earlier, 10% of my time was getting utilized for one purpose. What is that purpose? I was utilizing it for the purpose of investment management. Now I say I don't want to do it. I don't want to do it. If I don't do it, I can spend that time in mutual fund investments. This, you can say, is a gain of MF investing. It is a gain of MF investing, or it is an opportunity cost of own investing. It is an opportunity cost for own investing. If you do own investing, it is loss for you. If you do MF investing, it is technically a gain for you, whichever way you want to call. Either you call it as one, you cannot call both. You cannot say this is opportunity cost as well as an extra gain. An item can't become both. Either it is a gain or it is a opportunity cost. It can't become both. So whichever way we want to do. Now, right, cost benefit analysis. Cost benefit analysis of MF investing. Cost benefit analysis of MF investing. Particulars calculation amount. Particulars calculation amount. Cost benefit analysis of MF investing. Benefits. 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 First benefit I have is I earn 13%. That may not be a real benefit. It is lesser, but I'm earning 13%. What is my portfolio value? His portfolio value is 50 lakh. If portfolio value goes up continuously, then I may get into my own investing and all, because 50 lakh rupees, maybe MF is better. If it's 5 crore, 10 crore, that extra 1 or 2% makes a big difference. At 50 lakh may or may not make a difference. First thing is return from MF. Return from MF. 50 lakh into 13%. 50 lakh into 13%. 6 lakh 50,000. 2 lines gap. Costs 50 lakh into 13%. In the cost, right? Loss in own investment income. Loss in own investment income. Loss in own investment income. MF will give me 13%. If I had done own, how much I would have earned? 50 lakh into 15%. 7 lakh 50. This obviously tells me MF is bad, but there's one more angle. That one more angle we will analyze. Okay. Now, this presentation, your wish. Somebody will say, I'll not write 650 and 750. I'll directly write 1 lakh only. Your wish. Directly 1 lakh is what? Loss in return 50 lakh into 2%. What is 2%? 15 minus 13. 15 minus 13. You can directly write 2%. You can write 13% as benefit, 15% as cost, or directly net 2%. It's all your wish. Whichever way you want to present. Final answer will match. I don't know what I've done in the presentation also. I don't remember, but your presentation is up to you. Clear? Any doubts till this? Next, increase in professional income. Increase in professional income. Increase in professional income. This is an important adjustment. Increase in professional income. Today, how much is my professional income? 40 lakh. And it says I manage what? I spend 10% of the time to manage my portfolio. So earlier I had 100 hours. In that 90 for profession, 10 for investment. 90 is giving me 40 lakh. What is that extra 10 can give me? It will give me extra income. It will give me extra income. Earlier we were spending 90% time. Now we will spend 100% time. Now we will spend, and question is very clear. If he spends this time on profession, his professional income will go up in same proportion. If somebody says his professional income will not go up, table is over. You should not do MF investing. You should do only own investing. Now, right, 90% equal to 40 lakh. With 90% of time, I was earning 40 lakh. With 90% of time, I was earning 40 lakh. 100% equal to question mark. Do cross multiplication and tell me 100%. 44, 44, 44. 44 lakh, 44,000. How is it calculated? 40 lakh divided by 90. Divided by 90. 90 equal to 40 lakh. What is 100? 90 equal to 40 lakh. What is 100? If I do MF investing, I can earn extra 4,44,444 from my chartered accountancy practice. From my CA practice, I can earn what? Extra 4,44,444. Many people think that I do my own investing, I'll earn more. I agree to all that. But do you have the time? If you have the time, then okay. You don't have the time. You compromise something and spend that time. That is not acceptable. Compromising something. What is compromising? He is compromising his CA practice. He is compromising his CA practice and spending time on this. In case they had not given any opportunity cost data, I have no problem. I'll explain this again. 90% of my time, it says, if he spends this time on profession, his professional income will go up in the same proportion. My value is 50 lakh and I'm spending what time? 10% of my time on managing the portfolio. I earlier had whatever time, 100 hours, 200 hours, 2000 hours for a year, whatever time was available, 90% spent on CA practice. That gave me 40 lakh income. Extra 10% you are not spending on CA practice. You were not spending on CA practice. When you did not spend this extra time on CA practice, what unfortunately happened is your income got restricted to 40 lakh. Now, if you spend 40 lakh will go up to 44 lakh, 44,443. Increase in income. 4,44,444 increases this much. I can increase my income by 4 lakh. This is benefit of MF investing. If you want to do cost benefit analysis of own investing, then this is the cost of own investing. The same number will become opportunity cost for own investing. And if you are doing MF investing analysis, this is the benefit. Either you do that analysis or you do this analysis. Don't do both. Doing both is just waste of time. Either you do own investing analysis or you do MF investing analysis. In printed answer, I don't know what I have done. Either of this two I would have done. Any doubts on this? Right, total benefits. Total benefits. Put a total 10 lakh 94 triple four. Just check the totals, okay? 10 lakh 94 triple four. Net benefit of MF investing. Net benefit of MF investing. MF investing can be negative also. Negative means MF is bad. Positive means MF is good. Net benefit of MF investing. Clear? Any doubts on this? Can we proceed? Any doubts on this? Any doubts on 344, 444? Any doubts on this? Below the table. MF investing is advisable. MF investing is advisable. They wanted whether he can invest into multi-cap fund. MF investing is advisable and the same will give net benefit of rupees 3,44,444. 3,44,444. 344,444. Clear? Any doubts on this? Able to understand the concept? Got clarity? Any doubts on this? Done? I'll give you a minute. Go through it. Do your marking of easy, moderate, difficult. You want to write any points, write it. 1 minute for you. Okay, let's check your understanding now. Solve example 2. Example 2. I'll give you 3 minutes. Write in your notebook. Example 2. Almost the same adjustment only, but see here, I want you to spend time. Do example 2. I'll give you 3-4 minutes. 3-4 minutes to do example 2. Okay, I'll start discussing the answer. You would have done it in your notebook. If you have not done, you can then follow the explanation which I'm giving you now. So same table, I'm going to do it again. Cost benefit analysis of MF investing. Return from MF. Here we have a portfolio value of 100 lakhs and MF is going to earn how much? In this, okay, MF will give a return of 13%. 13 lakh. Own investing is what return? Okay, same 15%. 15 lakh. And same 90% of the time, but 90% of the time is giving what income? 45 lakh. 100% will give 50 lakh. Extra 5 lakh. The total benefit of MF is 18. 3 lakh is the net gain. Net gain of MF investing. 3 lakh is the net gain of MF investing. Any doubts on this? Clear? Able to understand this? I could have just done these two MCQs also. Just doing one thing I want is in your examples, don't write anything, okay, in your workbook. In your book, in your concept book, don't write anything because this you will use for revision. At revision phase, if you put a tick and all doesn't serve any purpose. You put a tick to the answer, then how will you revise? Because that time you will see the answer. So don't write anything in the concept book on the examples. Before example, you want to write anything, you write it, okay? Don't write anything there because this you will use it during your revision phase. Extensively, this will be used. So when you're using it for revision phase, that time, if you have already have the answer, how will you revise it? So don't tick anything at home during revision phase. Ideally, you should only go through the examples. Only the examples along with your moderate, difficult question, whatever you are marking. Any doubts till this? Okay. Okay, I go to the next concept. We will just discuss the concept today. Problem solving will happen in the next session. Holding period return versus actual return, versus annual return. Let's understand this first. Okay, I invest somewhere and I want to calculate return. I'm investing somewhere and I wanted to calculate what return are we generating. Like you invested in mutual fund, you want to now calculate what returns did you earn out of the mutual fund. Now, anytime I make investment, let's take some numbers. Okay, I invested 1 crore in this property. I invested 1 crore in this property in year 1, year 0. I invested today. Year 1 sold 1.25 crore. I sold it for 1.25 crore. I purchased it for 1 crore, sold it at the end of the year for 1.25 CR. Investment was only for 1 year. I wanted to do, I sold it. I also got rental income 10 lakh. Clear? Can you tell me what return did I earn in this? What return did I earn in this? If at all you can give me a percentage or rupee value answer. This is the example. 1 crore invested, 1.25 crore at the end of the year, 10 lakh rental income. Tell me what is the return earned. You should be able to tell me something. Right, wrong is okay. Live online guys, participate. What is the return earned?
35%.
Okay, I've got an answer in live online. I invested 1 crore. I got back how much? 1.25 crore. Is this my income? Rental income, 10 lakh. So I invested 1 crore. I got back 10 lakh. I got back 1.25 crore. 1.35 crore I get back. I get back how much? 1 point rental income. 10 lakh is my income. 1.25 crore I sell. So I invested 1 crore, got back 1.35 crore. I earned a return of 35%. I earned a return of 35%. Broadly, that's the number. Now, the calculation here is rental income plus, someone is unmuted. Can you please go on mute? Plus sale value minus purchase price. Sale value minus purchase price. No logic, no formula here. Just to understand the logic. Logic is very simple. You got some income, rental income. You sold it for something. You purchased it for something. This is in rupee terms. If you divide by your purchase price, you get percentage answer. You get the answer in percentage. So return is equal to, not this formula. Return is equal to what I get back. This is always the return formula. Minus what I give. What I get back minus what I give divided by what I give. This is the formula for return always. What I get back minus what I give divided by what I give. I invest in a share. 100 rupees is my purchase price. 5 rupees dividend I get. 120 rupees I sell it. What I get back is 120 plus 5. What I give is 100. What I give is 100. What I gave for the property 1 crore. What I got back 10 lakh and 1.25 crore. Every person, when he invests in an asset, he will get one regular income. What is regular income? Rental income, dividend income, interest income, and one-off income. One-off income is when you sell the property. When you sell the property, return formula is what I get back minus what I give divided by what I give. Obviously, in exam you can't write this, okay? But this is just for your understanding. What I get back minus what I give divided by what I give. This is what people understand. If I had ask this example to your parents, they will tell me the return correctly because their mindset is very clear. They would have told me, I invested 1 crore, I got back 1.25 crore, got back 10 lakh. They don't know formula and all. They'll give me the answer. If I had asked them, they would have clearly told our profit is 35 lakh in this, which is 35%. Because mindset is this: what I get back minus what I give divided by what I give. Now I'll give you a technical formula and all. But logic is, what is this? People who don't even understand AFM will give me the answer correctly. They'll give me this answer very clearly, saying that it is what I get back minus what I give divided by what I give. Moment we bring technical terms, sometimes some struggle starts happening. Now let's understand what I get back. What I get back is NAV1. NAV1 means NAV1. NAV is basically like share price. What is NAV? You'll understand later. NAV is like share price. So share price at the end of the year minus share price at the beginning of the year. Share price at the end of the year minus share price at the beginning of the year. That's called NAV1, NAV0. This is your capital gain. Plus you may get dividend income. You may get dividend income. There's something called a CG1. This is also dividend income only. I'll explain the CG1 later. Okay. This is also dividend. NAV at the end of the period. NAV at the beginning of the period. D1 is dividend paid. CG1 is something called as capital gains paid. For all practical purpose, it is dividend. Okay. For all practical purpose, it is dividend. Some terms I'll touch upon as we proceed. So what I get back is NAV1, D1, CG1. What I get back is NAV1, D1, CG1. What I give is NAV0. I can write NAV0 in the end or I can write NAV0 in the beginning. That's okay. NAV1, D1, CG1 minus NAV0 divided by NAV0 divided by NAV0. This is called return. What I get back minus what I give divided by what I give. What I get back minus what I give divided by what I give. Understand this formula only. I use this at least maybe in 20-30 question we will use this formula. What I get back minus what I give, not in this chapter, other places also. We'll use it in portfolio, we'll use it in maybe in forex, I'll use it other places also. Understand logic. Logic is very simple. What am I getting back at the end and what am I giving today? So I give today NAV0, I get back NAV1, I get back D1, I get back CG1, I get back NAV1, I get back D1, I get back CG1. Clear? Any doubts till this? Any doubts on the formula? Okay. I did this calculation. Another example. Okay. Purchase price of a share. Purchase price of a share 20. Selling price 25. Dividend 1 rupee. Dividend 1 rupee. Or just let me change the numbers. Selling price 21. Okay. Selling price 21. I'm changing the number. Selling price 21. Purchase is 20. Selling is 21. Dividend is 0.2. I'm changing the numbers. Dividend is 0.2. Let's calculate the return. What is the return? What I get back minus what I give divided by what I give. What I get back is these two. Selling price and dividend. And what I give is the price which I pay today. So what I get back is 21 plus 0.2. What I give is 20. You can subtract 20 with 21 also, or you subtract in the end, doesn't really matter. That's your wish. Okay. I call it as NAV1 minus NAV0, but you can deduct in the end also. Divide this by 20 into 100. Tell me the answer. What's the answer you get? Okay. 6% is the answer. 6% is the answer. I explained this to somebody. He said, I don't like this investment. 6% and all is very limited return. What kind of investment is this? What are you saying? We'll earn only 6%. I explained him. I said, it's a good company. We're earning 6%. He is not ready to listen to me, saying that 6% and all is bad return. But then there's one story here. I buy today, but I sell it at the end of month 1. I don't earn 6% for 1 year. I earn 6% for only 1 month. I earn 6% for what period? This is for 1 month. This calculation is for 1 month. People become very excited. 6% for 1 month is huge return. 6% for a year is bad return. You don't understand. So return, whenever we calculate, we have to do something called as into 12 by number of months. This is to annualize the return into 12 by number of months. I'll explain again. You are earning, last example, it was 12 by 12. Why 12 by 12? Purchased today, sold at the end of year 1. That time I did not explain this. Into 12 by M, if you do, it's called annual return. Into 12 by M, if you do, it's called annual return. Without 12 by M, it is called holding period return. Holding period return. What is holding period return? 6% for the holding period. What is holding period? 1 month. 6% for 1 month. 6% for 1 month. If you do into 12 by M, it is called annual return. Without 12 by M, it is called holding period return. What is holding period return? Ignoring the amount of time. Somebody says, I earned 100%. I become very excited. 100%. Then you say 100% in 10 years. I'll become 100% in 10 years is not great return. So people understand something called as annual return. Two types of return we can calculate. One is called holding period return. Second is called annual return. Holding period return, tell me the formula. What I get back minus what I give divided by what I give into 100 to express in percentage. Once you get this return, you want to calculate annual return, do into 12 by 1 month, 2 month, 3 month, 4 month, 12 by 24 months, 12 by 36 months, 12 by 120 months, or you can do 365 by number of days. You can do into 365 by number of days, or you can do into 12 by m. Both will almost give the same answer. Clear? Any doubts on the concept here? People normally understand returns for a year. If you tell you earn 12% return, people will feel it's 12% for a year. If you say you earn 5% return, it is for a year. That is what is normal mindset of the people. Mindset of the people is it's always for a year. So question may ask you to calculate annual return. Sometimes they may ask holding period return. Sometimes clarity is not there. I'll end up doing both. Clarity there, okay. Not there, I will end up doing both. I'll repeat the formula. What I get back minus what I give divided by what I give into 100. In exam, you'll write it as NAV1, NAV0, D1, CG1. What is CG1? I'll explain later. I need some more time to explain concepts. I cannot explain now. You need to do a few questions, then you'll understand what is CG1. Divided by NAV0. Divide by NAV0. Into 100 you do holding period return. Into 12 by M you get annual return. Clear? Any doubts on this? Today's session, I think we are kind of done. I'll discuss balance things later. So I'm done concept 1 and I've done concept 2. MCQ examples are descriptive question on this. We'll do it in the next session. Today you may not spend much time on the subject, but as we proceed at home after the class, you have to 100% go through concepts. 2-3 things which you need to do. One, go through concepts. Any example if I'm not done in the concept book, you will do at home. Any example if I have done, you have time, repeat the same example also, doesn't matter. You do the same example again, doesn't really matter if you have time. You don't have time, then you have to do the examples which are not done in the class. Some examples I'll not be doing it in the class, because the second example I should not have done it in the class, because when you would have done, you would have understood that there's nothing new. Sometimes I'll repeat both, depends on time availability. Sometimes I'll say you do this at home. Some questions also I'll tell you to do at home. When I tell you to do at home, you should do, because next class I'll discuss the question. Examples I'll not discuss, but descriptive question I'll be discussing in the next class. And every question you need to do that easy, moderate, difficult marking. That is going to become very, very handy. Clear? We'll end with this then. Thank you, friends.